Let's call the Financial Services and Multi-Lines Issues Committee to order. Any legislators on Zoom, please identify yourselves.
Assemblyman Ken Cooley in California, good morning.
Kevin Cahill in New York.
Paul Utke, Minnesota.
Pam Hunter from New York.
Senator Lana Tice, Michigan.
All right, and I'm Edmund Jordan in Louisiana. How about the legislators in Charleston? Would you please identify yourselves?
Joe Fisher, Kentucky.
Bob Hackett, Ohio.
Go ahead. Warren Kitzmiller from. I am Warren Kitzmiller from Vermont.
Roger Pickard, Rhode Island.
Jim Dunnigan, Utah. Senator Matt Pitch, Arkansas.
Ken Blankenbush, New York.
Representative Brenda Carter, Michigan.
Go Blue.
Steve Westfall, West Virginia.
Ronnie Cromer, South Carolina.
Jason Rapert, Arkansas.
Matt Lehman, Indiana.
Thank you. All right, can I get a motion to waive the quorum?
So move.
Can I get a second? Do we have a second?
Second.
All in favor?
Aye.
Aye.
Opposed? Can I get a motion to adopt the December 11, 2020 committee meeting minutes?
So moved.
Second.
Second.
All right, all in favor?
Aye.
Aye.
Opposed? Ayes have it. All right, the first topic we have for discussion is the NCOIL Insured Division Model Act. The original version was sponsored by Connecticut Senator Matt Lesser, but I think we have an amendment by California Assemblyman and Vice Chairman Kevin Cooley. And I think your substitute is on page 259 of your binders. So we'll be voting on the act today, but I'm going to turn it over now to Assemblyman Cooley.
Very good. Thank you, Mr. Chair and members. I'm very proud to sponsor this model. And what is presented before you today is a amendment, a refinement to the earlier model brought forward by Senator Lesser of Connecticut. The backdrop is in March of last year, NCOIL adopted an Insurance Business Transfer Model Act. Like the IBT Model Act, insurer division statutes are actually designed to address significant limitations in methods available to insurers when transferring blocks or assuming blocks for insurance business in a cost-efficient manner. While IBTs and insurer divisions are similar in some respects, they're nonetheless distinct restructuring mechanisms with different functions. Accordingly, following the NAIC's adoption of the IBT, it made sense there should not be one model without the other for states to consider adopting. So companion bills with a similar object on these two different types of mechanisms for restructuring business. Senator Lesser brought forward a model, and a distinction which emerged as we went through the process is that having a hearing on looking into what was going on in the restructuring at the state level was optional in the earlier model. As that issue has kind of kicked around, Colorado took the approach of a mandatory hearing requirement. And that kind of is the biggest distinction with the alternative model, is a mandatory hearing. I relate this back in the 1980s. I was chief counsel for the Assembly Committee on Finance and Insurance. And we actually did a lot of oversight looking into the administration of certain facets of the insurance department, because they had one unit where a very, very technical issues were being settled by one individual exercising their own judgment, and they were so technical, they weren't really exposed to public consideration, and controversy arose to that fact. And so, in my view, adding as a rule, a requirement for a public hearing when these types of transactions are being reviewed kind of aligns with what we say, sunshine is the best antiseptic. It just requires that the deliberations around the change, the restructuring of the business, albeit a very technical area, have the benefit of a public hearing and independent input. I think it supports transparency in government and accountability. And in that sense, I think it's actually a very constructive change. So the reason behind the replacement centers on this issue of whether to require permit insurance commissioner to utilize an independent expert and hold a public hearing during the course of reviewing an insured division transaction. While the first draft of the model permitted such action, the Colorado bill and the proposed alternative model substitute in your binders makes such action mandatory. That said, there are drafting notes included, which you would find on pages 264 and 267 of the model in your binders. These explain that while the model requires the commissioner to select and retain an independent expert and hold a public hearing in especially large or complex divisions, some state insured division statutes provide commissioner discretion to do so, regardless of the size of or complexity of a transaction. And then the model sets out factors states can consider when deciding whether or not to require the retention of an independent expert and require a public hearing. So the principal change aligns with this idea of sunshine is the best antiseptic. And in these types of insurer division transactions, the basic rule in the NCOIL model is that there should be a hearing with an outside expert to inform the exercise of discretion by the regulator, although we do provide this path via drafting notes. A few other changes made since it was released 30 days ago on pages 266 and 7. There is some adjustments that relate to how you reconcile changes in insured division with guarantee fund coverage. They just ensure that our guarantee fund systems act as expected and provide coverage where expected. So these changes are just designed to align our model with the guarantee fund statutes. It includes, it's similar to amendments in the NCOIL Guarantee Fund Model Act, now pending the PNC committee. So I present this as an alternative to the original model. I think it is a good place for NCOIL to land. I think making clear that we support, as I say, sunshine is the best antiseptic is a sound policy that is well established in our business. And through the drafting notes, it's designed to be respectful of kind of different local traditions. So, Mr. Chairman, that's my overview of the proposed change. I do request the support of this body on the substitute model, and I turn it back to you, Chairman Jordan.
Thank you, Senator Cooley. Next, we'll hear from Paul Morton with the Reinsurance Association of America. Is Paul there?
Chairman, members, Paul Martin, Reinsurance Association of America, here today in support of the committee's substitute to the model division bill. We want to thank Assemblyman Cooley for his leadership on this. As he indicated, this is essentially the Colorado bill that all the stakeholders worked on in 2020 to get into a place where everyone felt comfortable that there was a balance between the needs of companies that wanted to do division and the other stakeholders who wanted the transparency and the accountability that hearings and expert witnesses can provide. In fact, members, this substitute is so good. If it is adopted, we would urge this committee to consider reopening the IBT model that you passed last year and make the changes that are in this substitute and make those congruent with what is in the IBT bill. I know Senator Rayford is running the NCOIL IBT model in his state. Assuming those amendments that we proposed get into that, we're hoping that the Senator Jason Rayford Arkansas IBT model will become the model for NCOIL. We think that all of these strike a really good balance between the interest of all the parties and provide everyone the necessary confidence that when we do these transactions moving forward, that they have been vetted. And I'm happy to answer any questions.
Are there any comments or questions? All right, if there are none, then I'm going to ask for a motion to adopt Assemblyman Cooley's committee substitute with the changes that he's discussed today.
So moved.
Can I get a second?
Second, Pam Hunter.
Thank you. All in favor?
Aye.
Aye.
Opposed? All right, motion is adopted. All right, next we'll move on to the Remote Notarization Model Act. At the last meeting, we discussed this issue in December, and now we have the first draft of the model for discussion, which is on page 274 of your binders. Right, the model is still in the early stages and is meant to generate discussion, so there's no sponsor attached as of yet. But today we have speaking Bill Anderson of the National Notary Association and Frank O'Brien with the American Property Casualty Insurance Association. So, Mr. Anderson, the floor is yours.
Thank you. Good morning, everyone. Is there ability to share the screen?
There is. You should be able to do that on your own there.
Okay, let's see here. Let's see here.
Should be on the bottom of your screen. There's a green button that says share screen.
Yeah, it's asking for my security preferences here. Haven't done this for a while. Oh, hang on here. Let's see if I can do this real quick. Okay. All right, let's see if this works. There we go. I think we got it, right? Okay, so thank you, everybody, for allowing me to have a few remarks this morning. I want to talk to you today a little bit about remote online notarization. Let me just take a couple seconds here to clarify what we mean by remote online notarization, because there is not just one, but there's 5 different types of notarization in our world today. And it'd be great just to make sure we're all on the same page. The first type of notarization is paper notarization, and it's what we all have come to know very well, where the document signer and the notary are physically present before each other in the same room. Paper documents are used, and the signer uses a paper form of identification to verify their identity to the notary. And the documents are signed using ink pens and physical notary seals. The second type of notarization came about around 20 years ago, called electronic notarization. And in this, the document signer and the notary meet in each other's physical presence, like a paper notarization. Electronic records instead of paper documents are used, however, and the signer passes a physical form of ID to the notary, just like they do in a paper notarization, to verify identity. And since electronic documents are used, the documents are signed using electronic signatures and electronic notary seals. Then in 2012, remote online notarization came about. Here, the document signer and the notary appear before each other using communication technology, just like I'm appearing before you today with Zoom. Electronic records are used to transact the notarization. But with the identification, the signer is identified to the notary by using multiple factors of authentication, because it's inherently insecure for a signer to simply display on camera a physical form of identification to the notary like they would in each other's physical presence. And then the documents are signed using electronic signatures and electronic notary seals. The fourth type of notarization is a variation of remote online notarization called paper remote online notarization. And here, the document signer and the notary appear before each other using communication technology, like a remote online notarization. But paper documents are used, not electronic records, and they are signed and sent back and forth between the signer and the notary through the mail. The signer is identified to the notary using multiple factors of authentication, and I'll describe that a little bit more in a moment. And then the documents are signed using ink seals and physical ink signatures. And then the final type of notarization came about due to COVID in the last year, and that's what we call remote ink notarization. Like remote online notarization, the document signer and the notary appear before each other using communication technology. Like paper remote online notarization, paper documents are used and sent back and forth between the parties through the mail. Here, the signer is identified by flashing a form of identification to the camera before the notary while they're in the Zoom or communication technology session, and not by using multiple factors of authentication. And then the documents are signed and notarized with ink pens and physical notary seals. So with that in mind, I want everybody just to be clear that I'm going to be talking mostly about three here today: remote online notarization. And with that, let's just look at the lay of the land. As of 2021, we have 32 states that have enacted remote online notarization permanently in their statutes. The states in blue had enacted permanent remote online notarization through 2020. And the states in green have introduced it this year. And we already have 3 states that have enacted it: Wyoming, Utah, and West Virginia. I should also mention that the West Virginia bill also included remote ink notarization as well. And that's the first state that has chosen to enact a permanent statute like that. Now, all of these statutes that have been enacted are based upon one or more model or uniform acts, and they are these: our association's Model Electronic Notarization Act, which was published in 2017. The Revised Uniform Law Notarial Acts, published by the Uniform Law Commission in 2018. And then an industry-specific vertical, model legislation for remote online notarization by the Mortgage Bankers Association and the American Land Title Association. All of these 32 enactments reflect one or more of these acts, and these acts all have many things in common. Once the laws are enacted and all of the statutes give the notary commissioning official the ability and the authority to promulgate administrative rules, there is another set of standards that come in. The remote online notarization standards from the Mortgage Industry Standards Maintenance Organization. And many of the administrative rules across the country reflect those standards. Now, turning to the COVID temporary actions. In the last year, there's been a whole slew of activity giving notaries temporary authorization during the pandemic to perform remote notarization, either remote online notarization or, more commonly, remote ink notarization. There's been 26 governors that have issued executive orders allowing them to do so. 11 states chose to enact temporary legislation to allow notaries to do this. 6 states published emergency regulations. And then 16 states, their notary commissioning officials issued formal guidance to notaries on how to do this. Now, I note here that The states in red used one or more of these. So there might have been a state that had a governor issue an executive order, and then there might have been emergency regulations adopted as well as guidance. So there's been a lot of activity. Only 2 states during the pandemic have done nothing with remote ink sign notarization or remote online notarization, and that's the state of California and South Carolina. Now, with the 13 or so states, we've basically got 2/3 of the country that have enacted permanent remote online notarization. For the remaining 1/3, there are really 4 key policies that you really want to make sure that you clarify in your Model Act. The first is identification. I mentioned earlier that multiple factors of authentication are used in remote online notarization. Here, the body of literature suggests that you should identify a remote individual based on something they know, something they have, or something they are. Something they know would be knowledge-based authentication questions that only that individual could possibly be able to answer. Something you have would be an identification credential that during the remote online notarization session is captured on camera and then sent off to a third-party service to determine whether the ID appears to be genuine. Something you are would be like a biometric, a retinal scan, a face scan, a thumbprint, something like that. You should use multiple factors, 2 or more of those things, to identify the remotely located individual. Secondly, electronic records should be used. And I say this for 2 reasons. Because in an electronic notarization over the internet, you have a potential chain of custody issue. When you go before a notary for a paper notarization, we take for granted that the notary knows that the same document that they're notarizing is the same one that the document signer signs, because they just hand it across the table to one another. But with a remote notarization, how do you know? And with a remote ink notarization where paper documents are mailed, how do you know if after the person signs the document, they change something before the document gets sent to the notary in the mail? So in these electronic platforms that allow remote online notarization, they have the ability to present the electronic record being notarized simultaneously, both to the notary and the signer, and they can each see what each other is doing with the document in real time. So when they sign, the notary can see it. When the notary notarizes it, the signer can see it. The second reason you want to use electronic records is because it allows us to use cryptographic technology to apply what we call a tamper evidence seal to the document. Once the documents are signed, this cryptography solution is applied. And then after it's applied, if any changes are made to the document, everybody will be able to know that, and there'll be a complete audit trail of the changes. And then people can decide whether or not to trust the document or not. The third policy that you should consider is an audiovisual recording of the remote online notarization. All of these states that have enacted permanent remote online notarization require this, and it provides important evidence of the remotely located individual's willingness to sign the document and their mental competence in doing so. And it also provides evidence of what the notary did. Should a document be contested later, you'll have the recording there to see what everybody did. And then the final policy to consider is recognition. Notarial acts cross borders in documents every day. And every state has a statute that recognizes the notarial acts performed by notaries of sister states. We recommend that you leverage the existing interstate recognition laws that the states already have on the books to recognize remote online notarizations. There has been some discussion within the notary community of whether these interstate recognition laws explicitly will allow remote online notarizations. While they don't explicitly say so, my recommendation is that you fall back on them, because they all say as long as the Notarial Act is performed by a notary public of the sister jurisdiction, it will be recognized. So that concludes my remarks. I appreciate your time, and I'd be happy to answer questions.
Thank you, Mr. Anderson. We'll hear from Frank O'Brien first, and then after that, if there are any questions, we'll have him at that time.
Thank you, Mr. Chairman, and good morning, everyone. For the record, Frank O'Brien with the Property Casualty Insurance Association. So we put this issue forward, and we're pleased and thankful that NCOIL has put it on the agenda so as to begin the discussion. And from our point of view, from the industry point of view, this is part of a larger group of issues arising out of the COVID pandemic. One of the things that COVID caused everyone in the business community, and frankly, pretty much everyone everywhere, is to take a look at things in terms of what we were doing, why we were doing them, and how we were doing them. And this is part of a number of issues, including various electronic communication type things, including e-signatures, e-deliveries, and posting. On the auto claim side of things, various registry of motor vehicles. I'm from Massachusetts. We have the Registry of Motor Vehicles as opposed to the Department of Motor Vehicles, but DMV related issues, particularly in the area of total loss valuations, salvage titling issues, and titling issues in general. In that regard, I would note that a number of states are currently looking at various digitalization strategies when it comes to electronic vehicle titling. We're getting into areas including blockchain, which I'm sure that Mr. Anderson on the notarial side of things is aware of as well. We are also looking at remote issues. One of the success stories coming out of this, my colleagues in the agent community will know we've had a flood of states that have moved toward online and remote licensing applications, and that has proven to be successful and is something that bears looking into in terms of other remote applications, in particular on the examination side of things, both in terms of licensing, using financial examinations in a remote setting, and things like that. In terms of this particular thing, I want to note that Mr. Anderson has probably forgotten more about notaries and notarizations than I will ever know, and I appreciate his expertise as well as the expertise of his trade association. So in terms of looking at this from our point of view in the insurance community, one of the things that happened is that when we all went remote, like everyone else, all of a sudden, people didn't want to be in the same room with other people. And so that pretty much ground the traditional in-person notarization practices to a halt, the traditional paper approach that Mr. Anderson noted. And that required a number of states to pivot to various forms of electronic notarization. Some states pivoted more successfully than others. The 30+ states that were noted on Mr. Anderson's slides, I dare say they may not have been 30 different approaches, but there were at least 15 different approaches, depending on what state, depending on whose ox was being gored during the course of the process. For example, we ran into situations in some states where they allowed online remote notarizations, but the remote notary literally had to be in the same state, or in some cases in the same some sort of location requirement, and that caused some issues. The other thing that took place is over the years, it was one of those things that we used notary requirements on a lot of procedures because that's what we've always done. And it was easy to add a notary requirement. And over the course of the years, notary upon notary upon notary requirement was added to various processes. Particularly in the insurance context where we're moving more and more to the electronic side of things, it caused us to question whether there was value associated with the notary process. We do believe that there is value associated with the notary process in a number of different transactions. However, in some cases, there may not be as much value as perhaps there once was. For example, in situations where an insurance company has a significant number of vehicle titles, total loss situations, salvage type situations, where we have to track down the owner who is our customer, get that person's notary signature notarized. There's not a lot of value there. We know the customer, we know what we need to do. It's an extra step. On the other hand, the formal process of putting a notary signature and appearing before a notary does add a level of formality and a level of gravitas, if you will, to various transactions. So there are two ways to go through this. One is to take a look at moving toward a more remote notary process, basically making it easier. The other is to go through the statutes and on a case-by-case basis, kind of decide where a notary adds value and where a notary does not. We think that it is a more efficient way to do this, and frankly, a situation that would not engender as much opposition from the notary community to move forward in a remote notary situation. And that's one of the reasons why we put this particular piece of legislation before. It is a question of moving forward in an increasingly electronic environment, moving forward in a way to try to encourage efficiency, to lower costs. And of course, if we are able to lower costs, then that has a direct impact on the bottom line and the bottom line for our consumers. So, Mr. Chairman, I thank you for that. I thank Mr. Anderson for his knowledge and his expertise. I would note that the National Notary Association model is 134 pages long with comments and footnotes. And thank him for providing us with everything that you wanted to know about a notary, but were afraid to ask. Mr. Chairman, I'd be happy to answer any questions in that regard.
Thank you so much. Do we have any questions from anyone in the audience or on Zoom?
I have a question, Mr. Chairman. This is Jim Dunnigan, Utah. So, Mr. Anderson, I assume you're familiar with this draft we have before us, is that right?
I have it up in front of me, yes.
So I want to talk a little bit about identifying the person. You said there's no, have, and are. Is have like an ID, or maybe a biometric, and know some specific knowledge by the person?
About the biometric, I'm sorry?
So is have a type of ID? You said no, have, and are.
Oh, no, have, and are, yeah. Something you know, which would be like under your act, you have a definition of identity proofing. I think that would be what we call a knowledge-based authentication quiz, where an identity service provider like LexisNexis aggregates challenge response questions from your transactional and life history. And you're presented with those 5 questions, and you have to answer 4 of the 5 correct in 2 minutes or less in order to pass. So that'd be something you have. something you know. Something you have would be your ID card, which under the state statutes, they have a provision called credential analysis, where the signer takes a photo of their ID and transmits it through the system. And then again, there's a third-party service that looks at the ID and the placement of the elements on the ID front and back to determine whether or not it's valid. And then something you are would be a biometric. So.
Okay, so it looks like the proposed model talks about identity proofing, satisfactory evidence as a passport. So that's going to, or some other type of government ID. So that would be the have. Or if you have personal knowledge of the individual, or then you can go to what you're calling the know, where you have a evidence. Well, no, that wouldn't be the know. That would probably be the part of the have if you have somebody that has the LexisNexis or some other types of public identity proofing that they can do.
Right. The act basically says if the parties know each other. So if you're doing remote notarizations in your company, and there's lots of notarizations going back and forth every day. Like in our business, I'm a PC agent here in California in the 50 states, and we do a lot of notary bonds. And notary bonds in California have to be notarized. We could identify that person based on personal knowledge because everybody knows each other. We work with each other. So you wouldn't have to use the two forms of identity proofing in that regard, because you could use personal knowledge. You could also use what we call a credible witness. So that's a person that's known both to the notary and to the signer, who takes an oath to identify the signer. But if not, then you fall back on two forms of identity proofing, which would be the knowledge-based questions and probably the credential analysis as it is implemented in the current laws.
Is knowledge-based questions currently being used?
Yeah, oh yes, it's used in virtually all the states with enactments. In fact, if you were to get on a plane and if you forgot your ID to give to the TSA agent, they would put you through a knowledge-based authentication quiz in order to verify your identity so that they would let you go catch your plane. So it's a form of ID that's routinely used in many contexts today.
You're saying TSA would let us through the airport screening with knowledge-based questions?
Yes.
Oh, okay.
If you pass,
I'm not going to test that, but thank you. So,
yeah.
Okay, that's all my questions. Thank you.
We have any other questions? All right. I do have one question for you, Mr. Anderson. And I see in our model, we have a 10-year retention. And I can't speak for other states, but here in Louisiana, we have a 7-year retention on records for attorneys. So after you complete, and once the case is closed, you have to retain those records for 7 years. But here in Louisiana as well, we have that 10-year retention. And I'm just wondering why we would have a longer retention period on these remote acts as opposed to what we have for physical paper that we have, standard we have for attorneys. Do you have any comments or suggestions on that?
Yeah, there's been a lot of discussion on this. The statutes range from 5 years. 10 years is most common. And I think the reason is because the mortgage industry, they like records to be actually kept for the life of a mortgage, which could be possibly 30 years. And so they're probably going to keep them for 30 years if they can. But 10 years was kind of seen as something of a compromise.
Okay, thank you. All right, do we have any other questions? All right, if there are no other questions, this model is going to be discussed further at our next meeting in July. And you can submit any comments to the NCOIL staff. Again, thank you, Mr. Anderson, Mr. O'Brien, for your comments.
Thank you, Mr. Chairman.
Thank you.
All right. Lastly, we're going to discuss the general captive insurance landscape. And before you, you have some pre-draft language that can serve as a basis for the development of an NCOIL Captive Insurer Model Act. And we have three people joining us today. We have Anne Marie Tile from Global Captive Solutions, leader at Highland. Jeffrey Osborne, who is the chair of the South Carolina Captive Insurance Association, and Jeff Silver, who is the general counsel at Applied Underwriters. But before we start with those speakers, I want to first recognize Senator Rayford and Representative Dunnigan for brief comments.
Thank you, Mr. Chairman. I appreciate your leadership of this committee, and was down in Louisiana not long ago, and praying for recovery on your coast down there.
Thank you so much. We appreciate that.
Members, just wanted to make mention of this. I'll be brief about this. I just want to express my support for this discussion and the concept of captive insurers. As you know, several states have begun working on this issue. We've got a strong captive insurer in our insurance law, as well as regulatory environment in Arkansas. And I'm glad that NCOIL has taken up this particular topic. And what we hope is this will lead to the development of a good, strong model law or model statute on this topic. The language that you have before you, if it should be sitting before you at your desk, and I'm not sure remotely if it's been emailed or not, but the language that you have is in the early stages, obviously, and it's just a starting point. We were not at a point yet where we were able to get a full draft for you. So there are probably errors in here that all of us would point out that we would want to change, or we want to make mention of. And so I wanted to make mention of this. It's very important. I don't see Senator Holman in here. Of course, you know, Senator Holman is very well experienced in this arena. And so we hope that today's discussion will be one that will be educational, informative to all the members. And we would hope that as we get towards July, that we can have a version of the model ready and then begin to proceed forward with that. And Mr. Chairman, I'll close my remarks by saying that it's important for us, as we've done on many other issues over the last several years, that we put in place a good, strong model that can serve as a framework that all of the states can implement so that we can address captive insurers around the country. With that, I'll yield. Thank you, Mr. Chairman.
Thank you, Senator. Representative Dunnigan.
Thank you, Mr. Chairman. So I'm going to give just a brief overview of Utah's history as a captive domicile. In 2003, the state insurance commissioner approached me and said, you know, we'd like to attract captives to our state. It's a clean industry. Each captive typically brings a few good, well-paying jobs. So I sponsored legislation in Utah and created the statute to allow captives. A couple of the key competitive features: there was no state premium tax. There was a very simple $10,000 license fee. And it started to grow. In 2011, I sponsored legislation that amended it to allow for sponsored sell captives. Sometimes those referred to as rent-a-captives. And then from 07 to 16, we had a significant boom during those years with Utah becoming an attractive place for what are called micro captives. 2016, we reached a peak of 535 actively licensed captives. And for about the last decade, Utah has been the second largest captive domicile in the nation and the fourth largest in the world. Currently, Utah is one of the largest and most respected domiciles in the country and the world. Total annual reported economic benefit to the state of Utah, including local payroll, hotel nights, professional services, and other expenditures, has exceeded $11 million a year since 2011, with a high of $18 million in 2019. Total cash and other invested assets held in these Utah financial institutions reached a high of $1.6 billion last year, and total gross written premium was a recorded high of last year of $1.5 billion. This past session, which we concluded in March, the state risk manager came to me and said, well, Utah, we had an earthquake a year ago. The pandemic wasn't enough fun, so we had to go through a pretty good earthquake. We had some significant windstorms, and the state has billions of dollars of assets in buildings and property. And he came and said, will you change the law so that the state risk department or manager can create a captive to manage some of the risk and give us greater access to the reinsurance markets. So we carefully crafted that, very cognizant that we didn't want them competing with the private commercial market, and that passed this session. And that's just kind of a brief overview of what we've done. Thank you, Mr. Chairman.
Thank you, Vice Chair Dunnigan. All right, so hearing that, we'll start now with Ms. Anne Marie Tao.
Good morning and thank you. Look forward to having a discussion with you all today. I'm going to share my screen and a brief presentation and give you some facts regarding captive insurance companies. As you mentioned, I lead our global captive solutions team here at Hylant. I've been involved in the industry for nearly 30 years now, and really involved overall with a lot of different captive insurance associations. I currently am a board member for the Vermont Captive Insurance Association and on the board of directors there, and very involved, which is the largest US domicile here in the United States, third largest globally, very similar to Utah, as he just shared. And I think it's important as we're looking at model legislation and involving the different domiciles here in the United States and sharing information and getting them involved from that perspective. So hopefully everyone can see my screen here. So just want to review a couple of concepts with you to make sure, not sure how much of an understanding that you all have with captive insurance companies, but as we're working with opportunities and working with individual companies, whether they're for-profit or not-for-profit organizations, we really look at and evaluate their risk appetite tolerance. And there are a number of different types of captives that we'll touch on in a moment, but thinking about that financial control and program control. And these are really some of the big drivers for organizations when we look at from a US perspective and some of the IRS laws that are available and what you can avail yourself with, making sure you adhere from a risk management perspective and really what is the driving motivation of why people want to establish a captive. And it's really to take on some of the risk and manage that risk and control their losses. Because as you look at this spectrum and moving up from a guaranteed cost program to eventually a deductible program, and even up here at the top with a group captive program or a single parent, it becomes very instrumental as people are looking to control their costs from an insurance perspective. And part of it's going to be different for every single organization on how they measure their risk and what their appropriate risk tolerance will be. So thinking about what does that mean if I'm a not-for-profit community hospital versus a for-profit organization that's a global organization. How they measure their risk tolerance is really going to be very customized for each individual company. And that's important as they're evaluating taking on a risk program. And it becomes extremely important when we think about the plethora of risks that are out there today for many different types of organizations. We're dealing with a lot of different areas today that we weren't even 10 or 20 years ago. When we think about cyber threats, we think about active shooter. I'm here locally in Indianapolis, Indiana, and we had a horrific event a couple of days ago at a FedEx facility. And you think about these exposures to risk and what can you do to help mitigate some of these areas. And a captive can be a solution for many organizations out there. So when we think about how do you identify these different risks and design a program, today what we're seeing and some of the trends within the captive insurance organizations is the different types of policies that we have listed here on the right-hand side. So we're seeing a lot of active use in the property area, the property casualty market. Probably don't need to explain to all of you, but it's a hard market today. And with the pandemic going on, it's been a challenge for many organizations. So managing their property risk, some of their liability risks, Healthcare costs, as you can imagine, are continuing to increase. And so how do you manage it and finance some of it? And the way I view a captive essentially is it's a risk financing vehicle. So how can you set money aside, be able to protect yourself and control the claims that you have in a variety of different coverages? So when we think about some of those captive basics, it's looking at, in true form, the way I describe it is it's a licensed, regulated form of self-insurance. So thinking about very similar to any traditional insurance company, the primary use for a captive around the world with the 7,000 plus captives out there is really what we call a single parent captive. And a single parent captive is where you're going to insure the risks of your own organization and potentially any additional affiliated companies with you. And then you have that opportunity to take on a layer of risk. None of the captives out there that have been established here in the United States or even globally in the various domiciles take on unlimited risk. It's very structured and tailored for each organization. So managing that risk, for instance, a workers' compensation and taking on a primary layer and funding it through a captive is something that has been tried and true for quite a long time, since the beginning of captives. There are other types of captives. I know the gentleman from Utah mentioned sponsored cell legislation that was passed, and he was a sponsor of that type of legislation, which is important. So what we call here cell captive, sponsored cell, or segregated cell has become very popular over the last 10 to 15 years, because instead of setting up your own established captive, you could go down the path and actually rent it. And meaning instead of setting up and owning your own single family home, you could rent an apartment, basically, is what I compare it to. So renting it, there's lower cost of entry and lower annual operating costs, and the timeliness of being able to utilize and rent a facility is fairly quick compared to some of these other structures. And so it's become much more popular, and there are quite a few cell structures available in a variety of states and a variety of countries for organizations to utilize that type of facility. The other types of captives I'll touch on quickly relate to group or association or the risk retention group. And the risk retention group is a little bit more traditional, similar to a traditional insurance company, and follows the NAIC guidelines, of course. So there's been a lot of discussion and thoughts on, how can we make changes to any types of these captives, whether it's one of them or all of them. And I think when we're looking at model legislation and accepting and understanding the ability to do business in the various states is an important aspect. And I think that's something to consider when we look at the continued growth of captives, particularly in this hard market and coming out of the pandemic, and how people are looking to finance their risk and control their own destiny, as I call it. So a couple more points before I'll turn it back over to you, but wanted to give you just a little bit of that landscape of why captives continue to be very popular and a good strategy in the overall risk manager's toolbox. It's going back to what I mentioned earlier on having control. The other additional aspect that's really important for many organizations is the access to capacity. There are organizations out there, for instance, right now, child welfare agencies, they're having an enormously difficult time in securing cost-effective insurance for their sexual molestation coverage. And so where can they find additional capacity, and how can they finance this? So opening up a captive potentially is one solution where they can access additional reinsurance carriers that they might not be able to access from a traditional commercial placement. So looking at manuscripting your own coverage form, that could be a broader coverage form, and then seeking support from that reinsurance capacity is an important driver, I think, today. And we're seeing this more and more. The other area that I think is truly important is the pandemic risk opened a lot of people's eyes of business interruption and covering costs and insurance for the pandemic, whether it's event cancellation or even coverage for the interruption related to a virus or communicable diseases. So I think there's going to be a lot of changes coming forth with captive insurance companies who may seek to insure a layer. And I think that there is going to be additional capacity with reinsurers who may want to entertain and take on some level of risk in these areas. So we're looking at continued growth the next few years in this capacity. So going back and just wrapping up on a couple of the concepts of, there are a variety of reasons companies go down this path. And when they think about having a little bit more control over their own destiny and the flexibility with designing their own programs and still partnering with a lot of carriers out there, it becomes very instrumental when they're looking at smoothing out what I call smoothing out that cost of risk for the long term and not being subject to the peaks and valleys of the overall industry, because that can be extremely frustrating when you're trying to budget and plan for your insurance on a year-to-year basis. So when you have good loss history, you have the ability to be able to manage and finance some of those costs within an insurance company that you own and control and partner with those traditional insurance companies, it can be a win-win all the way around. So I think some of these reasons really help drive home the message and the thought process when you're talking to risk managers and the C-suites across the country with many organizations who've been involved with captives for 10, 20, or 30 years, or the stakeholders that are going down the path right now to explore this opportunity. So I want to open it up for any questions you might have, but I wanted to give you just a couple of basics and what we're seeing right now in the industry.
Thank you so much. We'll hold questions until all the speakers have completed their presentations. And so next we'll hear from Gary Osborne. Mr. Osborne.
Good morning, everybody. Can you hear me okay?
Yes.
I did hit the button. I thought, is it okay now? Okay. My name is Gary Osborne. I'm a Scottish chartered accountant that's been the pleasure of living here in South Carolina for the last 9 years, and I've recently served as the chairperson for the South Carolina Captive Insurance Association. I've been involved in the captive industry since 1985. I've lived in Bermuda, Vermont, Hawaii, and South Carolina, so I've got a great deal of experience with multiple jurisdictions that are working in this. I'm very familiar with Utah and other states. I think it's actually, what my colleague Jeff here will get into, that there are well over 35 states that actually have captive laws now. So I'm here to represent the South Carolina Captive Insurance Association. I also, like Anne-Marie, I'm involved with the Vermont Captive Insurance Association, so I'm also bringing some of their comments here. We're very open to hearing NCOIL's main drivers for this, because when we've seen this, I've actually been involved in creating laws in Vermont, South Carolina, multiple states, and there almost is a model act, and Mr. Kitzmiller, it's Vermont's. It's been almost the one, almost every other state has started with Vermont's law and adapted it. And so we would like to see the model act, if it's coming out as being a model, and there's a great starting point. And then you've got all the other states that have made a couple of variations. And I think this draft has done an interesting job of putting together the sort of best of all that that's out there. And one of the great things about the United States is obviously we have 50 different jurisdictions and there's a small amount of variation. So one of the biggest things we're wanting to make sure, if any model act comes out here, is not going to limit that ability to have some variation between them. We understand, I think one of the drivers might be that there's somewhat of a fear of a race to the bottom, that we're all getting too competitive in our industry. And so that's why we're here to talk with you, because we believe it's important that, yes, maybe there is some need for a sort of common standard across there to make sure we're all meeting at least some sort of minimum standard, but we really do look forward to having the ability to have variation between the domiciles. There's vast majority are very similar, it is, but for instance, New York and Texas have come up with laws that were very much designed for their own in-state companies. And so there's some variations in their laws that are very much targeting that a Texas business should do a captive in Texas. And if it's not really designed as a market for a South Carolina company to form a captive in Texas. So that kind of variability is quite important. And we're very enthused to see this sort of initial approach. We like the first model, but we'd like to be an involved partner to make sure that as our organizations can see that variability and flexibility is not lost. So that's basically my point. I'll let Jeff kick in at this point, but I think it's important that captive insurance is now alternative insurance is probably 50% of the market and growing. As Anne-Marie has mentioned, we're seeing vast amounts of companies formed right now. And the variety of states is actually a wonderful thing. And some sort of model act that might allow a little more clarity on where we're going to face self-procurement tax, where we're going to face different types of how do we operate across states is one of the biggest issues facing our industry. And there's been a few different approaches. So we're hoping as working with your kind of group that we maybe can come up with some answers that might allow for some sort of better reciprocity amongst states on how the captives are treated. Thank you.
Good morning, Mr. Chairman. Thank you very much for allowing me to appear. Mr. Vice Chairman, thank you for that information on Utah. We understand it is a vibrant captive jurisdiction. My name is Jeff Silver. I'm Executive Vice President and General Counsel for Applied Underwriters, Inc. We have been in the captive business for a very, very long time. Captives are proliferating, as Anne-Marie has indicated. I was reading yesterday that there are now more captive insurance companies in the world than regular insurance companies. And the amount of captives is increasing dramatically as a very, very valuable tool in a number of different instances in terms of captive insurance companies. It's also important to note that there is a vacuum at the NAIC with respect to captives. They've discussed captives in various discussion groups and things of that nature, but they really haven't addressed the issue of captives directly, which I think this model legislation will do. What the model legislation is intended to do, and Gary's point is well taken, every state's going to have some variation in terms of capital and surplus requirements and things of that nature. But what the act is supposed to do is to try to uniform it. We have 38 states that currently have captive laws on their books. This model act would attempt to uniform that. And most importantly, as Gary also pointed out, there's the question of reciprocity. You have, with the proliferation of these captives, they are also involved in multi-state jurisdictions. And what an issue that has come up and that we've tried to address is you have a state domiciled captive, for example, in Utah. What is it going to do when it does business in another state? Is it going to be recognized as a captive? So what the Model Act tries to do is a couple of things. One, it talks about some kind of uniformity in the application process to streamline that across the states. It also attempts to leave the capital and surplus requirements to each particular state so that they can set their own capital and surplus requirements. Section 15 of the Act talks about recognition in other states. And I think that's the area that really needs to be looked at and examined on a going forward basis so that the continued proliferation of captives can address the multi-jurisdictional issue that has arisen in the captive industry. And so I'd be happy to answer any questions you have about the Model Act.
Thank you. Do we have any questions from any of our legislators?
I do have one question if we have time, Mr. Chairman. I appreciate everyone for being here and the presentation and look forward to it. And as I think Mr. Osborne stated, NCOIL has had a great history in trying to pick some of the best ideas from across our states, our members that are involved here, and trying to produce models that absolutely are improve on the issue and also help to what I would say is improve the environment for different aspects of insurance industry. And so what I would ask you is that before you leave today, when you mentioned some of the best things that you've seen out there, could you leave us for one or two very important points that you want us to take away as we move forward for discussion on this? And that would be for either one of you.
I can happily take it that the important sort of things are that this is a regulated entity and should be subject to, we try to use the word light but appropriate regulation because we're really ensuring our own risk. But it's important, I think, that we have What I consider the best domiciles all require state examinations on every 3 or 5 years, or as appropriate, and they also require things like audits. So it's important that we have that, what I call the state departments rely on the auditors quite heavily, the independent audit. Those things to me are important. I mean, they are the ability to perhaps waive them for very small ones. I've seen that done. I don't mind that, but it's important that we have what I call that kind of light regulation, but it is regulated. We don't just become a free-for-all. There's definitely a need for those kind of oversight to make sure that the companies are doing what they're following, their business plans and so forth. So audits and examinations, I still think, are an important part of the process. We are regulated insurance companies. So I think those sort of things are in most of the major domiciles. And while there can be some flexibility around there, that's the kind of thing we're looking for to make sure that we are acting appropriately and responsive to the state regulators that are overseeing us.
I think the other point that I think is important is the reciprocity issue. I think that is critical in terms of as these captives continue to grow and each state continues to go out and get more captives, the jurisdictional issues that are going to arise between states having a captive in X state and that state's captive doing business in another state, we need to address that issue because it's becoming more and more of an issue on a going forward basis. So I would say the reciprocity issue is probably also a key issue to be looked at.
Jeff just reminded me, one example of that is, interesting enough, Ohio as a state has actually specifically excluded captives from self-procurement taxes. So that was that's a very clear example of a state that went out and said, look, captives are a useful tool. Whether you form it in Ohio or somewhere else, we are not going to impose self-procurement taxes on it. So Ohio is one of the leaders in that sort of reciprocity recognition for captives. That's just a clear example of one that's made an answer for us and made it much easier to do business in Ohio.
Yeah, I was going to comment on, you mentioned New York and Texas, and Ohio is very similar in that, and I carried the legislation, and it seems like ages ago. So, and I appreciate the work South Carolina and Vermont have done. Do you think, in hindsight, do you think that those 3 states are too conservative in how they do? Because you're right, you're exactly right, is that we just wanted the business of the corporations in our state, the business was going out of the state. So we just wanted our own corporations that have captives, we want them to move the captives to Ohio in a situation like that. And so, but at the same time, our Department of Insurance, and I see a commissioner in the back, he could comment, is that we didn't want to create a scenario of liability and potentially liberal captives that could create problems where major corporations were using captives to actually move some of the risk outside their bottom line. So, and I know most states don't allow that, but now that we've had a lot of years of captives, do you think Ohio and Texas and New York should get more liberal? What's your guys' feelings?
What you going on?
I would hope to see Texas and New York perhaps be a little more open. Again, that's I'm not going to tell the legislators how to do their business, but I think Texas and New York have actually been quite successful. They were very focused to start with, and I think they could expand. They've been I'm working with a company now to form in New York because it's a New York-based company, and it makes sense. The problem is if it's New York, but it's got operations in other states, it becomes a little trickier, and especially in Texas. Texas's law is a little more restrictive than New York, and I would like to see them be a little more open, but obviously that's for us and our members to try and convince the legislature that they are. But yeah, I think Vermont, South Carolina, Hawaii, Utah, states like that have done a great job of showing that they're not open for everything. They're definitely taking their responsibility seriously. The failure rates for captives, we do have failures. We're never going to deny that, but generally they are in line or lower than the traditional insurance industry. So yeah, I would like to see Texas and New York and a few other states become more open. I don't see it ever happening, but I would have no problem with all 50 states having a captive law. And then that would probably be the situation where most of the time it would be a company would form in its own state, because it does take care of many issues if you can do it in your own state. There's definitely been a movement more recently that if your company is trying to form a captive and you're one of the 38 states, it quite often makes sense to do it in the home state. So this model act, if it was sort of adopted across the country, could allow that. And then hopefully as other states get more comfortable with what's going on, yes, perhaps they would become a little more liberal in their rules.
Well, the last thing, and I say this to Jason, just the last thing, and I'll shut up, is that, when we create legislation, model legislation, we try to create the framework, but to give the states, the individual to develop the policy. As I say, Ken and I laugh about this, but Ohio and California don't agree on a lot, even that we work on some things together. And so it allows that. And so that's what I think, and even in this legislation, I don't want to see the conservatism of captives go away, of some captives laws in states, because I think that's why they wanted it that way. So I want the legislation to be a ability to protect everybody, but also to work for everybody. And so that each individual state that can come in and take the framework and then add on to it to make it more liberal or more conservative, how they feel they should do it.
Your point is well taken, but just recently, Washington passed legislation which taxes any captive that has a risk in Washington at 2%, but will not let you form a captive in Washington to operate. So there is a state that is going just the opposite direction, frankly, that we think the state should go in.
I have nothing further, Mr. Chairman.
Thank you, Mr. Chairman.
Do we have any other questions or comments? All right, hearing none, we will certainly discuss at the summer meeting, and it seems as if this topic has generated lots of interest. So I look forward to hearing more on it. Do we have any other business right now?
Thank you, Mr. Chairman.
Mr. Chairman, this is Ken Cooley. I do have a topic I wanted to bring forward.
All right, is this dealing with the legislative oversight?
Yes, sir, indeed.
Okay, I'll turn it over to you.
Okay, thank you, Mr. Chairman, and I will be brief. The matter I wanted to introduce today is the topic of legislative oversight, which I think is one that is relevant to NCOIL and our mission. I think in this time of COVID, many state legislatures have been feeling more assertive during the pandemic because in a lot of states, there's been extreme unilateralism by governors as they have fashioned a state response to COVID, very often without consultation in any material degree with the legislatures, which were often actually adjourned as a consequence of COVID, fear of becoming a super spreading event. In any event, there's just a heightened concern in legislatures, I think, on the role of the legislature as an independent branch of government and the mutual accountability that should exist. Today, we have with us Ben Ike from the Levin Center at Wayne State Law School in Detroit, who's going to provide some brief remarks about encouraging this exercise of the fundamental power of legislative oversight of our branch of government, asserting accountability on the executive branch. It is actually a very important evolution in Western law with the Magna Carta, which asserted powers on the king and said the king's powers were not unlimited. This is a very important idea. It influenced our national and state constitutions. And the Levin Center actually honors Carl Levin, a 36-year United States Senator from Michigan, who, among other things, chaired the U.S. Senate's Permanent Subcommittee on Investigations. And so I just want to introduce Ben Ike as somebody that is a resource for legislators. Here in California, we've worked with the Levin Center in some of our training for state lawmakers. They've also had a role through the Council of State Governments West in Western states, and then nationally through the Council of State Governments. So Ben Ike, if you will jump in and introduce yourself on this very important but very bipartisan topic.
Thank you so much, Assemblymember Cooley. It's really good to be here with everybody this morning. So as you mentioned, my name is Ben Ike, and I'm the manager for state training and communications at the Levin Center at Wayne Law. We are a bipartisan organization dedicated to the enhancement of legislative oversight. May I share my screen for a few slides?
Absolutely.
Okay, just making sure. All right, I think we're in business here. So thank you again. I will be brief because I know we've been going for about an hour and a half now. Thinking about oversight and thinking about these three propositions for state legislative oversight, good government really does require good oversight. We have to be able to gather the facts to be able to have a foundation upon which we can then go forth to be able to have policy disagreements. We believe that state legislatures of any size, of any makeup, can conduct good oversight. We have a research branch with our Levin Center. We developed a 50-state study looking at the state of state legislative oversight and legislatures across the country. And next week, we are actually releasing new research looking at contract oversight specifically. And we're going to be looking at Alabama, Hawaii, Idaho, Louisiana, Maryland, and Tennessee. And again, what we have found is all sorts of different states can develop all sorts of new, kind of unique and innovative ways to be able to conduct effective oversight to be able to make sure that the laws that we're passing, that the rules that we're trying to enforce are actually being followed. So it's very exciting to be able to see that. And also, we think that the public should demand good oversight from state legislatures. We have seen a little bit of a lapse in the attention on oversight, and we think part of that is due to a lot of the investigations you might have seen from perhaps the media are still happening, but just a little bit differently today with, of course, the rise of social media. And as a result, we think that the more the public kind of looks at this and understands that this is an issue and a priority, we think that will result in better government overall. So when thinking about who runs an investigation, you of course have your different committees with their various legislative priorities, but then you can have select committees. We have several state legislatures across the country that formed joint legislative committees in response to the COVID-19 pandemic to try to enforce effective oversight on how their state would respond, either through oversight on a state's unemployment system or oversight on the distribution of PPE. And then also individual members, kind of an interesting story. Yesterday, we had a meeting with the Washington, D.C. office of the European Parliament, and they lamented their difficulties in the European Parliament with getting members to participate in hearings or in investigations. And we actually responded back and said, you know, some of the best investigations that ever happen are investigations with just even two individual members, one from the Democratic Party and one from the Republican Party, and they just kind of hold each other accountable. They work on the facts together. They don't operate in an echo chamber. Those have been some of the best investigations that we've seen all across the country. There's a lot of influence in just the offices that we see state legislators holding and their ability to be able to conduct good, effective investigations. So over the course of an investigation, you got to go through kind of these four different stages. You got to do the fact finding, be able to get the information from the department, from the agency, whatever it is that you're conducting oversight over, and then be able to write it up. Because if you do not write it up, then it disappears. It'll be something that's forgotten if you're in a term limited legislature, or it'll be something where you get mixed up on the facts. It's very important to have that paper trail. And then during the hearing, there's all sorts of strategy in play of who you invite to be in that hearing, how you ask questions during the hearing, the order in which the questions are asked. There's a lot of strategy involved with that to be able to get the information you need to be able to fulfill your legislative purpose. And then, of course,
and if I may jump in,
please do.
This is Ken Cooley. Here in California, we've had the interesting experience that we are a heavily Democratic legislature. But the minority leader has actually in our training said she recognizes that part of the role is in bipartisanship. Sometimes the member of one party may be the one you want to tee up to ask a certain question so that it's an opposing party to, say, the governor or the governor's people. So there's actually a way in which the fact that we are of two different viewpoints, two different parties, actually becomes a tool in the legislature's toolkit to think how they choreograph some of how these hearings unfold, and getting this question of bipartisan, but who asks what questions even becomes a sort of a legislative skill and tactic.
And we have lots of trainings and information available on our website. If you're interested in looking at just kind of an introduction to this sort of a topic, we have several videos. We have various just information on how to kind of form your hearing, how to ask questions, how to be able to write documentation asking for information from a department or an agency. We have those resources available on our website as well. So if you do all of this, how do you know if it's good oversight? thinking about just the quality of this investigation, the credibility of your inquiry. You have various ways to be able to do this with DC, but unfortunately, at the state level, this is still kind of a newer area. You look at a relatively speaking, pretty decent size amount of research that has looked at congressional inquiry, investigations, and oversight over the course of many, many years. State legislative oversight, well, we're still kind of getting into that position of being able to measure what is and is not good oversight. We certainly have seen trends across the country in certain areas where legislatures at large do excellent oversight, and other areas that could be improved. Which is the reason why next week we are publishing that research looking at contract oversight, because we have seen that as a particular area really kind of all across the country that could be enhanced. So we can look at these different types of things on measuring good oversight, and we think that that's going to become a little more clearer, a little more apparent as we see different workshops that are conducted all around the country. We're very excited to be a part of it. And this is my very last slide. I know we've been going for a while, so I wanted to say thank you, and I wanted to provide a little more information about the Levin Center and really kind of what we're all about. We do provide oversight trainings for state legislators. That is our URL and our website. We had a very, very good hour-long presentation with the California General Assembly. Thank you again, Assemblymember Cooley, for all the efforts and the logistics and getting that all put together. I thought it was just a wonderful event. We have on stateoversightmap.org in 2019 is when we published our 50 state study, and that's just our state of state legislative oversight study, where we looked at every state legislature. We used these different dimensions of legislative oversight to kind of say, where are we now? Where are we today? We recently just launched a state oversight listserv, which is news on state legislative oversight from across the country, various events that are coming up, just all the different types of updates on this topic. If you're interested, please send me an email. I coordinate that listserv, and I'll send good, engaging, fun information. We, again, have that research next week. And then the last bullet point I have here is we have an upcoming panel that is going to be focusing on state legislative oversight in light of the COVID-19 pandemic, and that's going to be on May 4th. We have 3 panelists. We have a panelist, state senator from Nebraska, state senator from Idaho, and an assembly member from California, who are all going to be on. Really hope you can, you or someone on staff can tune in. Be delightful to have you. And if you have any further questions, you want to reach out, discuss oversight with me in more detail, feel free to send me an email, benjamin.ike@wayne.edu, and give us a follow on Twitter, Levin_center.
Very good. Thank you, Ben. Thank you very much.
Well, just delighted to be here, everybody. Thanks again.
Back to you, Mr. Chair.
Thank you, Assemblyman Cooley. And so just so you know that this will be discussed further at our summer meeting as well. I think we have some people, Mr. Ike, that would be interested here in Louisiana in talking to you. We've got some hot topics if you've been following the national news right now that our
absolutely
has been involved in, our women's caucus in particular. So I certainly hope you can reach out. I'll reach out to you and make sure I connect you with someone there as well.
We were recently contacted by a representative in Louisiana, so there is a little bit of interest that's been established, and I really do look forward to gaining traction and continuing this discussion.
All right, thank you so much. Any other questions? All right, if there's none, then I ask for a motion to adjourn.
So move.
Second. Second.
All right. All in favor?
Aye.
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 Opposed? This meeting is adjourned. Thank you so much. Good morning, and again, thank you all for joining us. My name is Edmund Jordan. I'm a state representative from Louisiana, and I'm also the chair of NCOIL's Financial Services and Multi-Lines Committee. And so I'm going to moderate this general session here that we have today. We have a great and distinguished panel of speakers with us here to discuss a very important topic and a timely issue. Mandatory police liability insurance and its impact on safety. One of our panelists today, Professor Deborah Ramirez, has authored a law review article entitled Policing the Police. Could mandatory professional liability insurance for officers provide a new accountability model? That article can be viewed on NCOIL's website and on the conference app. And just a side note, Professor Ray Diamond has talked here at Louisiana State University Law Center, has talked about a similar model. So I'm sure he's familiar with your article. In that article, the professor sets a proposed market-based solution for police accountability, mandatory professional liability insurance for police officers. Much the way that drivers with terrible records may be forced off the roads by higher premiums, officers with the most dangerous histories, tendencies, and indicators might be priced out of policing by premiums that reflect the actual risk of unjustified violence. Additionally, last year, Colorado became the first state to pass a law removing qualified immunity from the list of defenses available to police officers in certain lawsuits filed against them. Therefore, under the law, police officers can be held liable, financially liable, for judgments awarded in certain cases. Other states have introduced similar bills as well. In light of those developments, the panel we have here today was formed to discuss the arguments for and against such proposals, as well as how the insurance mechanism underlying the proposal might work. Joining us to answer these questions, again, as I said previously, Professor Deborah Ramirez, who's a professor at law at Northeastern University Law School, Jeff Harrison, the CEO of Promise Insurance, and Anne Marie Tile, who is the Global Captive Solution Leader at Highland, both of whom have boots on the ground experience in developing the insurance framework for the Colorado law that I mentioned earlier. And then one of my friends, Justin Bamberg, who's a member of the South Carolina House of Representatives and a practicing attorney who has extensive experience representing families of men who have been shot and killed by police in high-profile cases, including the Alton Sterling case here in Baton Rouge. So I don't want to take up any more time from our speakers and the Q&A session. So I'm going to urge you to reach out and read their bios, which are in the conference program and on the app, and to reach out to them afterwards to learn more about these important issues. So with that, we will start with Professor Ramirez.
Thank you very much. And I have some slides that I'm going to share. Do you want me to do that through share screen?
Yes, absolutely.
Okay. All right, so can everyone see my screen?
Yes.
All right, this is about police accountability, and it begins with an assessment of the problem. So a lot of people say to me, Debbie, what is the essential problem in policing today? And I say, the problem is we have a complete lack of accountability for officers who are engaging in dangerous and risky policing. And we all saw that policing when we watched the Chauvin tape over and over again. And so one of the questions that this is answering is, how do we stop that? How can we stop seeing these kinds of tapes over and over again? It's the underlying thesis of this presentation that even if we were to defund, dismantle, and reimagine policing in a more narrow way, we would still need a system of accountability. Right now, the problem is that there is no way to weed out the bad officers so the good ones can thrive. And it's almost impossible to lay off a police officer because of the union protections. Officers who engage in dangerous and risky behavior today remain on the force until that behavior escalates to the point where we have a tape of Derek Chauvin murdering George Floyd. And when they are sued, when the Floyd family sues, the taxpayers are going to bear the costs of that police misconduct. Now, you might ask, how did we get here? And how can it be that there's absolutely no accountability in this system? And I will tell you that the reason is that the police unions are running policing. And that means the only system of accountability we have is for police to police the police. And that is not working for us. Now, when the first thing I did when I started my research was to interview many police chiefs, including my own police chief in Boston. And I said, Chief, what do you think the problem is? And he said, because every single police chief faces the same problem. All of the responsibility, none of the control mechanisms. I said, what do you mean by that? He said, Debbie, I can't hire officers who I want to hire. And that is true for every big city police chief in the country, right? And probably for most of the chiefs who aren't in the big city. I can't hire the officers who I want to hire as guardians of this community, as people who will make Boston safer and stronger. I can't hire them. I can't hire the people who have experience in problem solving, mediation, de-escalation, and working with economically disadvantaged communities. I can't hire them. I said, why? He said, I have to hire whoever gets the highest test score on the civil service exam. And he said, frequently, I never even get to that list because I first have to hire anyone who has veterans preference. And he said, Debbie, it may be that some of the people who get the highest score on the civil service exam and some of the people who are veterans would make excellent guardians, but not all of them. And I don't have any control. I just have to hire who's ever on that list. And he said, you know what the best way to prevent dangerous, risky policing is? He said, to hire the right officers in the first place. And I can't do that. He said, then, do I get to promote the officers who I think are doing a great job meeting with the community, engaging in de-escalation and problem solving? No. Again, I have to hire the person with the highest civil service score. He said, now what about disciplining? He said, let me tell you how it works here. He said, I have disciplined one officer twice for excessive use of force. And each time I'm overturned by the police union controlled arbitration process, each time. And that officer is still on the force and I disciplined him twice, overturned twice. He said, so I can't discipline the officers who are hurting the community and terminating them. Said, I can't fire them. I said, Billy, what do you do with them? He said, I put them on the front desk. I was like, oh, that explains everything because I have to go to the front desk to get to you. And every time I do that, it's a real problem. They look at me, a Latinx woman, they put me on the bench. There's no cell phone coverage. I have to go outside, call your secretary and say, please let me in. Imagine if you had a complaint against the police, who do you go to? The officers on the front desk. So the problem here is, as I said, police can't hire, fire, promote, or terminate. And the problem is also the cost. So in this presentation, I really want to follow the money here. There's a lot of money being paid out by municipalities for police misconduct because there's no accountability system in place. So as you can see, in New York City, they paid $384 million over 5 years and $230 million in 1 year. In Chicago, $350 million. That's a lot of money for the municipality to pay. A single settlement in Minneapolis in the Damon case was, this is just one case, $20 million. And I'm sure most of you know that the Floyd family recently received a settlement from Minneapolis for a jaw-dropping $27 million. That means the city of Minneapolis, just for those two cases, and there are many more, is in the hole for $47 million. Okay, now you might say, how can that be? And it's interesting because, as you can see, when an officer like Chauvin engages in misconduct, a family like the Floyd family sues under 42 USC 1983, and they get a settlement against the officer, or they get a judgment against the officer, and legally, the officer has to pay that. That's why we have this doctrine called qualified immunity, because we don't want to hold the officers personally liable if they were not knowingly engaged in wrongdoing, right? My former husband was a judge, and when he heard my presentation, he said, I can't believe this. Every time we entered a verdict as a judge or as a jury against an officer, I thought the officer was going to pay it because legally that's what's supposed to happen. And I said, well, I know, but there's another piece. Okay, so legally the officer's liable, and then the union, through collective bargaining, negotiates with every municipality in the country for the municipality to pay the officer's legal obligation. So the municipalities pay all of the costs of police misconduct. And that means empirically, in 99% of the cases, police officers like Chauvin pay nothing. They pay not 1 cent. Who pays? The city pays, Minneapolis. And where do they get the money? From taxpayers, from us. We pay. And how do they find that $47 million that they didn't expect to come out of their budget? They take it from the schools. They take it from other municipal functions. Now, I want to focus on a solution. And I am thrilled to be here today because I actually hope that even one person in this room will decide to help us with this. We are in a real crisis in this country. And in an open and democratic society, we have to find a better way to police. We need your help. I need your help. So help me figure this out. Here's the idea. We could begin to insure police officers like every other professional is insured. Lawyers, doctors. Just the way that doctors who engage in reckless medical practices can be priced out of practicing medicine by high insurance premiums, police officers with the most dangerous histories and indicators should be priced out of policing by premiums that reflect the actual risk of their dangerous policing. Now, what would that mean? Well, you know, my neighbor's a doctor. He says to me, Debbie, I have to carry professional liability insurance. And if I start operating on the wrong leg or the wrong arm or doing crazy things, my premiums will go up, then they'll skyrocket, and I'm priced out of medicine. He said, why doesn't it work that way for police? And I say, Jonathan, it should, but we don't have that system in place yet. Now, one aspect of this is that drivers also carry insurance, and drivers also get priced out for reckless driving. But this system also envisions potential reductions or decreases in premiums when officers get evidence-based treatment, training, or counseling, such as anger management, de-escalation, or substance use disorder treatment. They can get a reduction in their premiums the way we give drivers reductions if they take certain training courses, etc. What is the solution? Well, really the solution is to price someone like Derek Chauvin out of policing before he ever meets George Floyd. That's how we would save lives. And this is a system focused on prevention, detection, and deterrence. Because right now in America, the only way that we are dealing with police brutality, the only thing we are doing is reacting. We try to hold officers like Chauvin liable criminally and civilly after he murders George Floyd for real accountability. We need to get ahead of the problem and prevent, detect, and deter police brutality before it happens. This system saves money. It's much cheaper than what we've got in place. And that's easy if you can't design a system cheaper than the one we have, we're in a lot of trouble, because the one we have in Minneapolis, it's 47 million for just 2 cases. If you can't create an accountability system for less than that, we're in a lot of trouble. And it also is providing traumatized police officers with treatment. It's identifying them and giving them evidence-based treatment. All right, how does it work? Carrots and sticks. The officer has to carry professional liability insurance. The police department pays the average base premium for all the officers, so it costs the officers nothing. But if your premiums rise due to risky behaviors, then you have to pay that increase, and you have to pay a deductible if you're sued. Right now you pay nothing, but you'd have to pay, I don't know, $3,000, $5,000 as a deductible, as other insurance models are. And municipalities get out of the business of paying 100% of not just the police misconduct do they pay. They also pay the legal fees for those police officers, and you'll see those officers testify everywhere. And also the lawyers will testify, because there are a lot of lawyers making a lot of money by being paid by the municipality to represent the police officers in these misconduct suits. Okay, you might ask yourself, well, how are we as an insurance company going to figure out who are the risky officers? And I will tell you, this is a really easy game to play. As you will see, there are a lot of indicators here that are easily located. So one thing is domestic violence restraining orders. Those are usually published in the paper. There's usually an article, officer so-and-so just received a domestic violence restraining order. It's also a matter of public record. Many of these officers have been involved in 2, 3, 4 settlements and judgments for excessive use of force. Again, those are public records. Civil complaints, especially the number of sustained complaints, would be part of this. Some of those are public, some of those are not. But under this system, every year, the police chief, under pains and penalties of perjury, has to give you some information so that you can do a risk assessment scorecard for the officers. And that would include the number of complaints and sustained complaints. Criminal convictions, surprisingly, or maybe not, a lot of these officers do things that we don't want to do and go places we don't want to go, and they experience trauma. And the trauma comes out. They start slapping around their wife, they beat up their kids, they start using drugs, they start using alcohol, and they go into bars and assault people. And they get criminal convictions for drunk driving, for assault and other things. Those, again, are public records. Disciplinary action taken would be part of the information that the chief would have to give to the insurance companies for the insurance companies to do risk assessment, and the police can't police without their insurance. Number of times a service revolver is discharged. Now, I know because of the tapes, we think the police are the wild, wild west, and they're constantly just pulling out their guns and shooting people. But in fact, only about a quarter, 27% of all police officers say they have ever fired their service weapon while on the job. So again, looking at the number of times a service revolver is discharged is an indicator. Subjective indicators are unjustified use of force and unjustified use of service revolver. Okay, I want to look at Chauvin for a minute because he had a lot of early warning indicators. First of all, it's interesting to me that one of the best police chiefs in the country, Arredondo, who we saw testify in the trial, began as the Minneapolis chief of police in 2017. Chauvin is on the force. And personally, I could have identified him as a risky officer. I'm sure Arredondo knew that he was a risky officer, but as I said, he has no tools to do anything. Chauvin was 19 years on the force, 18 prior complaints, 16 closed without discipline, 2 sustained. And this thing in 2007, if I were investigator, would draw my attention. In 2007, this is a sustained complaint, meaning that they found the complaint to be true and then they disciplined him. A woman said, I was driving 10 miles over the speed limit. Chauvin stopped me, pulled me over, frisked me, took me out of my car and put me in his car. That is not the way it should have happened. Most officers would not even be stopping someone for driving 10 miles over the speed limit, much less frisking them, much less taking them out of their car, much less putting them in their car. And interestingly, the squad car video, both the sound and the video were turned off. Okay, let's look at shootings. Now, remember I told you before, most people aren't using their gun at all, but in terms of shootings, Chauvin had 3. In 2006, he shot and killed a suspect. In 2008, shot a domestic assault suspect. In 2011, on scene and firing at a man running from another shooting. So there's a lot of different accounts of why the shootings occurred, but nonetheless, you have one officer involved in 3 shootings. That's a warning sign. And the high number of complaints, the 18 complaints, some people say it's 22, compared to other officers, you have to compare oranges and oranges, apples and apples. But his numbers should have definitely raised alarm. Most officers get 1 or 2 complaints in 7 years in Minneapolis doing the kind of policing he was doing. So really, Chauvin should have been priced out of policing long before he met Floyd. I want to do one more, which is Pantaleo. Pantaleo was arrested for killing Eric Gardner. Gardner was choked to death, murdered by Pantaleo, and saying, "I can't breathe." That was in 2014 in New York. Gardner was selling single cigarettes. Okay. Now, Pantaleo had 3 prior lawsuits, 2 separate pending lawsuits for illegal searches, which were substantiated by the Civilian Review Board. Again, this is all before he met Eric Gardner. And before he met Eric Gardner, they already settled an illegal strip search. And he had another suit for crashing his police car into another car, 1 disciplinary action. But the most important thing about Mr. Pantaleo is he plays in a pretty dangerous playground. The New York Police Department is a tough sandbox. And yet he rose and rose to become he's in the top 2% of all New York police officers for the most civilian sustained complaints. That should have triggered a warning long before he met Eric Gardner. I'm not going to go through Van Dyke, but I could go through 15 of these. There is not, and I've been doing this a long time, it's not my first rodeo. There are always warning signs, as you think there would be. They don't start on the force on day 1, being able to put their knee on someone's back for over 9 minutes and watch them die. In between, there's a lot that happens, and it's apparent. A lot of the police officers who email me say, everyone knows who the officers are who are drinking, taking drugs, who have anger management, who are beating up their wives, beating up their children, engaged in assaults. We all know who they are. And they said, what I like about your system, Debbie, is you give them a second chance. You identify them. You try to get them treatment. If they don't, you price them out. And by the way, they say, you know, the police unions may say they're protecting us, but are they? Look at where policing is. Is it more dangerous or less dangerous for me as a police officer after that Chauvin tape? Is his presence on the police force helping or hurting me? And what about Chauvin himself? Is he really better off in that defendant chair, about to go to jail? Or would he have been better if he had been priced out of policing earlier? A lot of police officers write me and say, We are embarrassed. We are mortified. We are horrified. This is not who we are. So when police unions say, I'm not helping or understanding that they're doing a dangerous job, I say right back, are you helping? Because I don't think the police officers on the street are better off under a system that we have now. What's the roadmap to accountability? We'd like the state legislatures to begin to narrow the scope of collective bargaining, which they can. They are in charge of what unions can collectively bargain about. And they could say, you can't bargain about hiring, firing, promotion, and allocation of payment for police misconduct. We'd like the legislature to require that all police carry professional liability insurance, which indemnifies them for up to either $500,000 or $1 million. And we'd like to stop and prohibit municipalities from indemnifying police officers for 100% of misconduct. And for those municipalities who want to do something and don't think their state legislatures can help, they themselves, Boston, the city of Boston, I'm meeting with the city councilors next week, and I am recommending to the mayor of Boston, Mayor Janey, our new mayor, and the city councilors, that they just stop paying. They are in the middle of negotiating here in Boston with the police unions, and they can stop paying. They can stop paying 100%. They can stop paying the first 100,000. They can stop paying 100% of the cost of police misconduct, and they don't need the state legislature for that. All right, how does this model work? I want to begin by saying to anyone in insurance out there, this model has a 75% return rate. This is a very viable model. You can make a lot of money on this. This is one of those areas where you can both do good and do well. This model is based on New York City. The number of officers are 36,000. The number of settlements for that, the year we used it, which I think was 2 years ago, is 2,136. The average claim was $10,000. And we put a cap on this, a maximum claim size. This is really important. We did it at 500,000. And at 500,000 as a cap, that's what the insurance is going to cover, and they're not going to be able to get anything else. 98% of the victims are going to be compensated. It ends what I call the sort of Russian roulette table of torts, in which sky's the limit, and it could be 27 million, it could be 40 million, right? It stops it. It puts a cap on it. We've done this in other instances. So this system has a $500,000 cap, has a deductible of 5,000. And total deductibles are 10,000. Base premium per officer is $70 per month. Again, that is paid by the police department. And earned premiums are $55,944. Total payout is $24, and minus the deductibles. The profit margin on this is 75%. Now, how are we saving money? Well, first, we're instituting a deductible system so that there's a deductible amount whenever there's a settlement or judgment. There are premiums in excess, which are the premiums in addition to the base premium that the officer is paying for reckless and dangerous policing. And there's a capped settlement. Since the police department pays the base premium, the reflected savings may be about 53%. So all of the settlements and judgments are paid by the police and their insurance. If you didn't take into account the fact that the premiums are being paid by the police department, it's a 75% cheaper model. And there are additional savings because some of the brutal conduct, like Chauvin's, would be, I think 99% of it, if this system were in place, would be prevented, detected, and deterred. There's 27 million right there. So that is the system.
So 3 minutes.
Okay.
Thank you.
Next steps. We'd like to see model legislation for requiring police officers to carry professional liability insurance. We'd like this organization or others to issue a report for municipal government leaders on the need to stop paying the full costs of police misconduct. We'd like to see some best practices and promising practices and practical approaches to developing professional liability coverage. We're trying to get an academic center at Northeastern to study professional liability insurance. And we'd like some ongoing data collection about police settlements in main cities, number of officers, and disciplinary records. Thank you very much.
Thank you, Professor. Moving forward, just to get us back on time, we're going to limit the speakers to 10 minutes each. And that way we can save about 5 minutes for Q&A. And if we need to go a little bit further on that, we may have some leeway on that. But now we'll move on to Jeff Harrison.
Hey, Jeff, you need to. Oh,
Jeff Harrison. Jeff is next.
You guys hear me?
Can we? Yes, we can.
All
hear
right.
you now.
Okay, good. Sorry about that. So, Deborah, great job on the presentation as always. So, and let me give you just a little bit of background. So, I'm with Primus Insurance. I'm one of the co-founders of it. I started, and I'll give you just a little bit of backstory of how I even got to where we're at right here. So, about a year ago, I started. I just basically started with the question of why is all this stuff happening? Why has this been? It seems like you start seeing these, riots, disputes, and things like that. That I know the first one I noticed was probably in '92, whenever it was in LA, and then it seemed like it would be, I don't know, maybe 8 years, and then there'd be another one, and then it was like 3 years. And then it's like, it just kept getting narrow and narrow. And I was just like, what is going on here? So I just dove into what is going on and why is this happening? So I just, the first thing I noticed was that police officers do not have professional liability insurance. And I thought that was pretty shocking. And let me tell you why I think that's shocking is because, I know Deborah said, oh, well, all professions have liability insurance, and that's not just a small thing. If you're a notary, you have to have professional liability insurance. My wife is a couples counselor. She literally works with married couples. They sit on the couch and they argue about each other, and she has $1 million worth of liability insurance. That's what she carries, and a police officer has zero. That's just nonsense. So I just looked at this thing and I said, well, why is that? Why would they put themselves at so much risk from a financial side? Because as she noted, this goes back 150 years from the Civil Rights Act. In 1983, it says if a government official breaks the law, which is the Constitution, then you can sue them. It was clearly stated 150 years ago. This is already there. Nothing has to change. That was the thing I basically said. There's no law that has to change that holds these guys liable. They are liable. They lose these lawsuits. What's happening instead is, as she noted clearly, is the municipalities, the taxpayers, will pay their bills. They still lose. Even with qualified immunity, they still will go to court and they still will lose. That's all happening. So I looked at this thing from the standpoint of, I said, wait a second here. They're all liable right now, and they need to have some insurance. And this was before anything happened in Colorado or whatever. So I read a great law review by Professor Schwartz, and it clearly lays out that even cities and states that will say we're not indemnifying these police officers, they still will do it. It happens all the time. So I looked at it from the standpoint of saying, wait a second here. At any moment, police officers are at huge risk that at any moment, anybody who gets put into the city council or the state or whatever, at any moment they can say, on you. It's on you. You broke the law. You took away someone's civil rights. Why should that be the taxpayer's problem? You pay it. So I said, I just looked at that thing and went, okay, let me go find out what I'm wrong, where I'm wrong on this thing. I had a prior connection with a police chief of Fort Worth, Texas, because I'm in the Fort Worth area. And he's now retired. And I reached out to him. His name is Jeff Halstead. And, you know, he's 40 years or whatever in the police force. And he was like a major police chief. And I just laid out the whole thing. I said, this is what I'm thinking. I want to put something together like this. I know, just tell me why I'm wrong. What's going on here? And he listened to the whole thing. And at the end of it, he just said, yeah, absolutely. This is absolutely needed. I was like, I was expecting him to say, you're never going to get anywhere. The police unions are going to shut you down. You might end up with, you know, lead shoes, and you're going to be at the bottom of the ocean if you mess with one of these guys. And he was like, no, we absolutely need this. And he laid out a lot of the same stuff that Deborah had pointed out about this whole thing. And so I said, okay. So, and a part of that, I, through connections, reaching out to professors, anyone who wrote these things, I ended up getting in touch with Deborah and talking with her and her team. The accountability warriors, by the way, that's what they are. So as we were talking, she was like, wow, you're the first insurance company who's even contacted me. I can't even believe this. This is amazing. So I just went to her and I just said, why is this happening? What's going on here? And we just started talking about the whole thing. And around that time period, actually Colorado passed something that I went, wow, this is almost exactly because I had looked at it from the standpoint of, I don't have any preconceived notions on how it should be. So I'm just saying, give me a blank sheet of paper. I want to make this thing right, which means you have to take into account real economics. You can't just sort of make it up. It's got to be real economics. How do you make this work? And Colorado's law came pretty darn close to what I would set up. And it seems like nobody had really kind of talked about this way. So here's what I would set up if you gave me a magic wand. I'll tell you what Colorado is. So Colorado is any officer who's found loses a lawsuit or they settle, they have to pay 5% of any judgment settlement up to $25,000. So to get to $25,000, that means that the settlement would have to be $500,000. So I've been in contact with Leslie Herod, who is the author of this law, a couple times, and I asked her, why did you come up with 25,000? That seems like the most random number I've ever heard in my life. And she said, well, we started at 100 and we just got it negotiated down. I was like, okay, that's fair enough. So here's what I would, and then anything that's above and beyond that, then the police department, municipality, taxpayer, however you want to look at it, they take the rest of the burden. So the way if you guys said, hey, Jeff, you've got all the power in the world, we'll give you the magic wand, how would you do it? I would set the first limit, the first loss, as we would say, first loss is on the police officers, obviously, because they did it. So I would set that amount. Now, what that amount is, I don't know what that magic number is that's right, whether it's 25, 50, 100, don't know. But what I can say is we've gone and got the information on what has happened in Colorado with some help from Deborah's law students to go get Freedom of Information Acts for us and found out the real data that goes back 10 years. So we're actually talking real numbers. And based on that, the average is about 50,000. It's somewhere in that range. So I would say that if we could set a cap for police officers at 50,000, that they're the first loss, that would cover the majority of it. Now, here's the other thing. So the real nickels and dimes, you got to look at that, because these guys are, and you know, I say guys, women, whatever, you know, they police officers make somewhere on average, say 60,000, 70,000, something like that. So you have to take that economics into play as well. So at that rate, at a 50,000, between 25, 50,000, you're looking at it's going to be between $30 and $40 a month. That's what it's going to cost for these police officers. So you're talking $1 a day for these guys to be covered, which is in line with what other professional liability insurance is for other people. So to get, and what this would do is it makes the police officers having skin in the game financially. Of course, they have skin in the game on their physical side, no doubt about that. They do a dangerous job, but this puts it in a financial standpoint, which they do not have right now. Anytime someone has a financial loss, that puts skin in the game. I mean, it's kind of akin to if I told you right now, magic wand, calories mean nothing to anybody ever again. Well, we're going to have ice cream for breakfast. We're going to have a cake for dessert. And then we're going to go for, we're going to have baby back ribs all day long. I mean, so that's what it is right now. You have to have something where these guys they actually pay it. They pay every single month, and their premiums can go up and down according to how they do. So, I mean, this is just obvious. I mean, I have a 7-year-old daughter. If I told her she could just go to Target and go to the toy section and buy whatever she wants, she's going to come back with a cart full, 3 cartfuls. I mean, so, but when I give her a budget, my gosh, you'd be amazed how much that changes. So, I mean, this is just obvious behavioral economics. So I would sit there and yes, and yes, that may sound like a drop in the bucket. Oh, it's only 25,000. There's, 20, she just said $27 million settlements out there. But here's the deal. What's the goal of all this? I mean, let's put the goal let's put a solid goal on what we're trying to get accomplished here. We're not trying to pay settlements. That's not the goal. We're trying to get 0 victims. Let's stick to 0 victims. That's the goal we're trying to get. What's the best way to do that? Behavioral change. Put these guys on the hook as much as possible. Don't let them get away with just passing it off to the daddy taxpayer to pay their bills. That just doesn't make any sense. I mean, this stuff was all set in the Constitution. I mean, there's a reason why they put limits in our forefathers put limits on the capability of what the government officials can do. I mean, they knew what it was like to be under dictatorships. So, one
minute.
Yes, sir. So, in my 1 minute, I will say this: we have, talking about the police unions, we are making connections with major police unions. They're reaching out to us, asking us for this product, even in states that have not taken away qualified immunity or set any kind of cap on the police officers on what they would have to pay. So what they want to do is they want to be able to take our policy and wrap it into their legal defense fund that they already pay to their members. So the members would just pay, they get their legal defense fund taken care of and have an indemnification policy as well. So it's not as if they're a lot more interested in it than you probably would have thought. So that's it.
All right. Thank you so much, Mr. Harrison. We'll move on to Ms. Anne Marie Child.
Thank you again. And I think I'll keep my remarks pretty short because I think Professor Ramirez and Jeff did do a great job of laying a little bit of the landscape of where we are here today in America. And when we think about it from an insurance aspect and developing a product, it's not dissimilar, as Professor Ramirez mentioned, with medical malpractice insurance and even professional liability. If I'm an architect, for instance, I'm a CPA, I'm required to have insurance. If I were to hang my shingle out on the door and with the advice and my actions and what I'm providing, I have that potential to be sued. So I want to protect myself. So when we think about physicians and many years ago and the different statutes within the states, in my opinion, growing up in the insurance industry and working in this area, it really is no different. So how do we enforce these protections? How do we provide the type of insurance that is required by these police officers? It's no different for some of these police officers, quite honestly, in the aspect that when we think about them moonlighting, there are moonlighting policies available out there right now in the traditional insurance market. So for instance, I'm on the police force in Indianapolis, Indiana here. And then in my off-duty time, I'm acting as a security guard for the local mall or a local store. They do have policies that you can purchase as an individual police officer to protect yourself in that line of duty and what you're doing. So when you think about that aspect and applying it to what all of these individuals, the gentlemen and ladies that are protecting our cities, our counties across the country, there needs to be some accountability. It goes back to that accountability word and being responsible for your actions. And when we talk about insurance, and for those who were on the call earlier today, when we were talking about risk management in general, we are applying it to captive insurance. But when you think about for any organization out there, whether you're a public entity, you're a privately held corporation, you need to be accountable and you need to know and understand your risk exposures. And the biggest key with insurance, it's not only how are you going to defend yourself if you have a claim, but it's preventing the claim from happening. So we talk about prevention, safety, loss control, and changing the behavior. And that applies in any type of insurance, whether it's workers' compensation, medical costs for your employees. In this particular instance, when you're talking about the police force that's out there on a day-to-day basis, how can we prevent these from happening? And it's making everybody accountable. For instance, as I'm a CPA or others on the call here are attorneys, you're upheld to a standard of duty and duty of care. It's very similar from a policing perspective, and we need to hold them accountable for those actions and get the intermediary steps that are necessary for those that are struggling. Just like any other industry, if you have a physician who's not showing up to work, is having a series of claim events, there's the insurance and the protection for him or her, but they also, if something happens, they're going to see an increase in that activity from a premium perspective. And so you need to have those standards in place. And this is something I'm working very closely with Jeff, Professor Ramirez, and others in the industry to develop an appropriate product. Colorado obviously is one of the first, and then we're working with some of these other states. And I think this is necessary because it goes back to the protection and them having skin in the game, quite honestly, to hold themselves accountable for their own behavior. And I think that's an important aspect as we think about what is happening and the changes right now, because we're seeing more and more activity, and it's disappointing, quite honestly, in my opinion. And it's hard because there are victims out there, and a lot of victims, and we're seeing this more and more in the news on a daily basis. And it's very frustrating when we think about our world and children and bringing more children into the world, and how do we justify our actions. And I think it goes back to that moral standard of we need to hold people accountable for their actions in a modern society today. And so providing this type of insurance product and being able to take some of the relief, as Professor Ramirez, off of the cities and the taxpayers, all of us as the end user, quite honestly, it's deterring those dollars from other areas of a city or county government where they could be redeployed in a positive manner versus in this situation, and holding them accountable. So I think that's where I'll conclude my remarks in order to continue from a timeline perspective here today.
Thank you so much. And now we'll turn it over to Representative Bamberg.
Thank you all so much, and great remarks from everyone. Professor Ramirez, amazing presentation. You know, as a lawyer and a legislator, especially a lawyer doing civil rights, there's always this perception that, you know, we hate police and things like that. So I want to tell y'all just a really brief background on me. I come from a family of law enforcement. My father is the first African-American sheriff elected in Bamberg County, my home county. He's been doing it 30 years. My mom retired after 28 years. She retired after I took a case against her department while she was working there. My brother was a state trooper. He now works for the Fed. And I think, you know, when we have this discussion, the idea of mandatory police liability insurance is a very good thing. And it is something that we do need to look at and we need to push. But when I approach it, what I want to offer today are just some things to think about. Sometimes you have to start at the end. What problems are people going to point out with such an idea and deconstruct from there? You know, one is we have reality, and then we have a perception of reality. And sometimes those two are not the same things. And you see it, you know, with the defund the police movement and things like that. How we coin things is going to position people in certain corners, right? So the idea of mandatory liability insurance, it's not just officer accountability. It's about improving the profession as well and insulating the officers who do a good job. I remember when I was 12 years old, there was a 12-year-old in our community with suicide. Never hung as tight when he got home from work. There was an officer involved shooting. Someone who didn't need a rifle had one and shot somebody in the back of the head. My mom went and grabbed this guy's brain and pushed it back into his skull and saved his life. I have never seen her cry that much at night. Right? We're talking about dedicated folks who see the worst of the worst, get up every day. Mandatory liability insurance is about protecting them from the Chauvins, from the Michael Slaters. Right? So I think that is a big part of this, is anything in policing. When we went to do a ticket quota ban here in South Carolina after Walter Scott, it's messaging. I think that's very important. When we look at accountability, so if we were going to go to a mandatory liability insurance structure, from a real life standpoint of practicing and things that I've seen in departments, we have to figure out how to answer this question of internal accountability. What do I mean by that? A lot of the information and decisions as to whether someone's punished, some of the stuff Professor Ramirez showed on her presentation earlier, you know, was somebody exonerated? Was what was alleged against them sustained? The department themselves make those decisions, you know. So I've come across instances where a lieutenant in the department lied to internal affairs. Internal affairs investigated, reported to the chief. That finding sat on us a year and a half until I was suing the agent, and someone accidentally turned it over for discovery. I'm asking the chief about it. He's like, "Oh, I was going to do something in 2 weeks," right? If we're going to adjust premiums based on bad conduct, those adjustments have to be based on accurate information. And how do we get that out of these agents? How do we make sure that when someone does use excessive force, it's documented appropriately? Are we going to require officers to self-report? Knock on wood, I've never been sued for malpractice, but I know if I slipped up, the first thing I'm doing is I'm calling my liability. Hey guys, I might maybe get a claim brought against me. Boom, 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 boom. Are we going to have officers do that? Are we going to have them not? Are we going to just base it on what departments do? I think those are things that we have to think through and plan for now. Coverage denials, right? If something happens and a department doesn't appropriately document it, is that going to lead to a denial of coverage for that particular officer? Much in a way, you know, if you go to get life insurance, in this state, we have a 2-year contestability clause, and I forgot to tell them I smoked weed 2 years ago. So I checked no. And I died from a heart attack one day, and they go and find in my records that I smoked a joint. They may deny my coverage on that life insurance policy. So we need to look at the impact of improper documentation and what that may do. Very, very good point. There are plenty of indicators. I 150% agree. Michael Slater, since this is held in Charleston, when he started, he wasn't whooping ass, stuff like that. I mean, he came out of the Coast Guard, seemed like a good dude. Over the course of his career, his use of force increased every year. And the year that he killed Walter Scott and shot him in the back from 100 feet away, he accounted for over 3% of the use of force for a department of 342 officers. All right. You look to Baton Rouge with Blaine Salamone, it's documented. There are plenty of indicators there that could be used to make this system work. I would point out cost concerns. You know, my dad is a sheriff. He's been a chief of police before. He was chief of police in a small town in South Carolina. I believe his pay was 25 or 30,000 a year as chief. It took him 25 years to make more than 50,000 a year. And that's with smaller local agencies. If you get a job with the state, so for example, my brother, when he was with the Highway Patrol, their pay scale is a lot higher. So we need to be prepared and have a thorough explanation of how officers are going to afford to pay for their own insurance. Specifically as to the areas in this country where officers do not get paid that much. You know, 30 years ago when my folks started down here, 15 grand a year is what my mom made working for a small city police department that has 3 cops. You know, so we've got to be able to answer that, because in a lot of places, folks are still making 30 grand a year. You know, my dad as sheriff took over, wanted to try to give officers a pay raise in the department. He took a pay cut as sheriff to be able to afford to give some extra money to hire a new officer. And I think they're paying him $32,000 a year. So we've got to look at that. The effect of race. Okay, and race is a very touchy subject. I think anybody would be lying if they refuse to admit that minority officers get punished more frequently and a lot stiffer than their white counterparts. So when we look at self-financed insurance or forced liability insurance and the reporting aspects and the things that we're gonna point out to make premiums go up or down. All right, the Somali officer in Minnesota that killed Ms. Damon, murder, no question. There was no raise in hell about whether or not this cop should have been charged with murder, blah, 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 blah. Okay. Meanwhile, we're in trial on Chauvin talking about whether or not drugs matter when a guy got suffocated for 9 minutes. Okay. In the course of my career and things that I've seen and monitored, minority officers get arrested faster, they get written up quicker, and they get punished way more severely for smaller conduct than their white counterparts. Okay, and with that being the reality in certain parts of this country, are we going to accidentally price out minority officers from policing, which is already one of the biggest problems we have? Is, you know, you have a majority black area with majority white police, and a lot of them don't even live in the neighborhood. So with the reporting aspect, with the way that minorities are written up more, those are going to be indicators in an insurance evaluation. So we need to consider that now to make sure that we're not accidentally getting minority officers booted out of the department because, well, damn, Bo, I did the same thing that James did, and my insurance is $200 more a month because they punish us more. So
1 minute, Justin.
Okay, we need to consider that. We need to make the push. Qualified immunity needs to go. I served on the Biden-Sanders task force on criminal justice. It was a very, very big part of the discussion. And My position in qualified immunity, which I think will assist in this discussion of getting mandatory insurance, is qualified immunity already exists. Don't do evil and you have qualified immunity. Okay, it's pretty freaking simple. And you're still entitled to self-defense. Police unions, very big problem, especially when they defend evil officers who do horrendous conduct, because they don't look at the good of policing as an institution. And I'll stop there for purposes of the discussion. But that's what I would say is we got to make sure we look at all of those things that are going to be used in the argument to try and kill any effort to get mandatory liability insurance in place. Thank you.
Thank you. All right, so we're going to open it up for question for Q&A, and I'm going to start opening it up to the panel, I think, with Representative Bamberg's question. Do we run the risk of pricing out minority officers from policing? So anybody who wants to take that. Professor? You're on mute right now.
I think it's a very, very good question. And when I had the slide before, we tried to use what I call our objective indicators, and not rely so much on subjective indicators like whether or not the officer was actually disciplined. So there are some objective indicators. A domestic violence restraining order is race neutral. The number of judgments or settlements that have been entered, whether the officer is black, white, or any other color, if there's been a settlement or judgment for excessive use of force, for illegal strip searching, or something else, those are objective. Criminal convictions, particularly for driving under the influence and for assault, and the number of times a service revolver is discharged. So there are a number of objective indicators. And also, I know that it sounds like this is a purely punitive system, but it's designed to identify the officers who are having problems. And the beginning response is, you need treatment, you need training, you need counseling, you need substance use disorder. And I've talked to the police chiefs about this, and they say, first of all, we try that. We know who the officers are, and we try to say, hey, you need anger management or whatever. And they say, and the officer comes back with the union, and the union says, you cannot, as a condition of employment, even if you pay for it, ask this person to engage in counseling treatment because it's not a bargained for condition of employment. So the chief, even if they want to do this now, they can't. But the insurance company can by saying, look, here's what your premiums are. And if you would start to resolve this problem, they could be reduced. So it's not like there aren't officers of color who also are experiencing trauma and who also are going to need treatment. And this is not a 100% punitive system.
I'll answer that some too. So, and Bamberg, you asked some good questions there. Okay, so here's the deal. There's nothing set up right now because there is no insurance out there for this. So there hasn't been, like medical malpractice, there is a system out there that keeps track of what we want to know. There is no data for this. So one of the things that passed in Colorado was they made it mandatory. So when certain triggers like, reprimands or anything like that, there's a whole list of all these things. What they do now is they send that information to Post. So that they are sending it to a central location so that you can monitor this whole thing, which is like obvious. I mean, we need to know this information to be able to improve it. I mean, what gets measured gets improved. So there's a company called Benchmark Analytics that does this. So they, at the beginning of January, they started doing this in Colorado. They already do it for other departments. So they're doing it for Minneapolis. So basically, I've talked with the CEO. He's said, hey, I would love to be able to help you guys out. Obviously, this is where we would need some help from the legislation, because they are going to be getting the data and they're going to be putting it into beautiful graphs and things that we can all see. But I don't get that information as of right now. So the legislation has to, I mean, he could just, technically, yeah, he could just hand this to me and I could get this, but he can't do that. So we have to, from the insurance side, we need to be able to get that information. We have to be able to get the data to be able to create what I like to call, I mean, it's like a credit score. We have to be able to score. And if I were to put this another way, I would say, why don't we incentivize these police officers to be awesome? Give them a chance to win. Give them a chance to win. So instead of making this a credit score or a risk, and calling it a risk score, call it something good. Call it a hero score. Put it in the frame for them. Make it like a baseball card where you can see the guy's stats. How good are they? Did they take all this other stuff? Make it so that they have a chance to show that they are improving and getting better and that they're doing a good job, instead of showing that they do a terrible job. Reframe it to give them positive feedback. So that's what I would do. So there's already a company out there doing this, Benchmark Analytics. Anyone can look it up. They already are getting this data, but we have to be able to get that data as an insurance to be able to price the risk of these different police officers. Now, as far as race, we don't know. I mean, that's just what's the score. I mean, that kind of goes down to who made those marks on them at the police department. We wouldn't know that. So that's another issue. I don't really have an answer for that.
Can I say one
Mr.
brief
Chair?
thing? Oh, go ahead. Go ahead.
You're muted.
You're muted.
Thank you. I was about to say, we have a few other questions that came in over the chat, and they were talking about coverage exclusions for illegal acts, and then there was another one just about pricing out the smaller communities or these rural departments. Are we going to make it as such that they don't have any officers that they can fill their rosters with? So if anybody wants to talk about the exclusion for illegal acts and how that might work, and then the risk of pricing out these smaller communities.
If I could just
go ahead, Justin.
I'll just take on the pricing side. So
okay.
that sort of goes back to what I was talking about earlier. If you wanted, so what we're actually doing in Colorado, I mean, this is not hypothetical. This is what we've set that we're going to be doing in Colorado. Is it's going to be right around, I mean, don't hold me to it 100%, but it's going to be somewhere between $30 to $40 a month for these police officers. So you're talking literally $1 a day. So you're talking $365 for a full year. Is that going to price out people that are making that per day almost? So that right there sort of shows the pricing of it. And I think that's a critical thing to this whole equation, is you have to set a first loss that the police officers are taking responsibility for, and then we can price it accordingly for them so that they have skin in the game and they're paying for this stuff. So that's my answer on that.
And I would add, this is Anne Marie, I would just add real quick that the model hasn't been fully vetted as far as if the unions are paying for part of this or if the individual police officer. I mean, we've been working on how do we make this manageable, back to Jeff's point, but I think that it's going to vary by state statute eventually and how that's handled. But we feel with each individual officer and having some skin in the game is going to really be instrumental in driving this.
And on the coverage exclusions, we see those a lot in alcohol related things. Like you got a bar, the number one thing that happens in bars is drunk bar fights. But for whatever reason, on their policy, there's an exclusion for assault and battery. Well, then why the hell do I have general commercial insurance? Like only to insulate me for a slip and fall? So if I were in this state to file legislation mandating this, you know, there'd be some prohibition, you know, like these type of exclusions for criminal conduct and et cetera are void, they're void as a matter of public policy. Because if you don't block those exclusions from being able to be implemented, then we're not accomplishing anything. Because let's just be real, the thing we are even here today for is officers who are purposefully doing terrible things or who are just complete idiots on the job to the point that it's, you know, more than gross negligence. It's criminal negligence, right? If you allow the policies to be voided, are we wasting our time? I think legislation has to include provisions to ensure that coverage cannot just be denied because you murder somebody or because you get charged with murder in the third degree, like they would if I purposely ran somebody over with my car. South Carolina Farm Bureau is going to throw me to the wolves because I did it intentionally.
All right. Well, I tell you what, we've got about 1 minute. And so I have one question for the professor. I think this can be a yes or no. There are federal bills related to the removal of qualified immunity, the Indian Qualified Immunity Act and the Justice and Policing Act of 2020. Do you foresee either of these bills gaining traction?
I don't know, but I think it's completely irrelevant because whether or not, let's say we abolish qualified immunity today, it does nothing about accountability. And the police, the whole reason you have qualified immunity is to protect the police from personal payment, and they're not paying anything. So they don't pay 1 cent now. All you have done if you abolish qualified immunity is increase the amount of dollars taxpayers are going to be paying for a whole range of misconduct without any prevention, detection, and deterrence. I think it's a shell game. It's great. It will provide more compensation for victims, and it will increase the bill for taxpayers, and it will provide absolutely no accountability. And the officers will still pay not 1 cent.
All right. I wish we could go longer. We're going to try to hold, they're going to hold me to this time schedule. Again, I think this is an interesting conversation. I think we need to delve into it more. I have so many more questions that I wish we could discuss right now. Maybe we'll have an opportunity to bring it up at a later meeting. But if not, I will certainly send some questions to all of you, and hopefully we can further the discussion online. Thank you so much.
Thank you, everyone.
Thank you.
Thank you.
Good afternoon, everyone. I hope everyone can hear me. This is Assembly Member Pamela Hunter coming to you from Central New York, Syracuse. I am your chair for the Health Insurance and Long-Term Care Issues Committee, and we are going to get this committee meeting started. So we're going to call our meeting to order here at 1:32. I'd like to ask any legislator who is on Zoom to identify themselves now, please.
Assemblyman
Cahill from New York.
Jim Gooch from Kentucky.
And Deborah Ferguson, Arkansas.
Tom Oliverson, Texas.
Paulette Key, Minnesota.
Are there any other legislators on Zoom?
Edmund Jordan,
Kentucky.
Okay. Let me ask legislators in Charleston to identify themselves, please.
Steve Westfall from West Virginia.
Paul Whelan, Missouri.
Jim Dunnigan, Utah.
Justin Hill, Missouri.
Bob Hackett, Ohio.
Bart Rowland, Kentucky.
Okay, thank you very much. I'd like to ask for a motion to waive the quorum, please.
I'll move it, waive.
Second, please.
I'll second.
Thank you, Paul. All in favor of waiving the quorum?
Aye.
Voice vote? Thank you very much. I'd also like to ask for a motion to adopt the December 11th, 2020 committee meeting minutes, please. May I have a motion?
I move we approve the minutes.
Thank you. A second?
A second.
Thank you, Deborah. All in favor, voice vote, please.
Aye.
Aye.
Thank you very much. Okay, we are going to jump right in. We have a hefty agenda here today. We're going to continue our discussion on the NCOIL Telemedicine Authorization and Reimbursement Model Act. I'd like to thank everyone for their work thus far in the model. It still remains a work in progress, but I am confident that we'll get to a place where everyone can support it. There'll be no vote today. Hopefully this model will be ready by our July meeting, or at the latest, hopefully our November meeting. I do want to make one point before we go any further. A lot of discussion on the model thus far has been centered around the issue of payment parity. I'm sure you all in all of your states have been having that discussion. We had a lengthy discussion during our New York State budget relative to expanded telemedicine coverage and payment parity. The model is in your binders and it's on page 302. And the reimbursement language is in section 4D on page 304. By using the words "on the same basis" in quotes, we're not calling for payment parity, but rather payment equity. For example, there is reimbursement language in a pending Iowa telemedicine bill, which says, quotes, "A health carrier shall reimburse a healthcare professional and a facility for healthcare services provided by telehealth on the same basis and at the same rate as the health carrier would apply to the same healthcare services provided in person," end quote. Such language is a great example of strict payment parity, which differs from the language that you will see in the model you have before you. Just wanted to make that clear before we move forward. I'd like for us to now move to Brenda Papardo of AHIP, America's Health Insurance Plans, who would like to comment on the model. Then we'll ask if there are any legislators or comments or questions. Brendan, please.
Thank you, Chair. I've spoken on this, I think 3 times now before NCOIL, so I'm not going to go through everything I said before. I do want to commend you. I think there are a lot of good things in this model. And I know you've been working hard on it and giving it deep consideration. With respect, we do not read that language about payment parity the same way that you are reading it, and we have significant concerns with that language. We do believe it requires payment parity. One thing I just want to point out is that we've had a lot of discussion about the value of telehealth as an additional method of accessing services. We think that's absolutely correct. And one of the things that we've discussed with you is that this is seen as a potentially lower cost option, and it has been priced accordingly in benefit design. We want to make sure that we keep the consumer in mind as we're moving forward with this. And that's why we believe it's important to leave it to negotiation between the carrier and the provider on the payment rates. And we don't believe that this model should be speaking to payment rates at all. So we would request that that language be removed. I think I'll leave it there and just say that, again, I appreciate some of the comments that legislators have made. If you are not comfortable removing it, we would ask that language be inserted, making it explicitly clear that this does not require payment parity. And I'm happy to answer any questions. We've, as I said, had a lot of discussion about this already, but I don't want to take up more time unless people want to talk about something I've said.
Thank you, Brendan. Let's see if there are any questions from legislators in Charleston or on Zoom. I am looking at the raise hand function and I don't see anyone's hands raised. Are there anyone in Charleston who has question or comment relative to the model? A question for Brendan.
This
No
is-
lights here, Madam Chair.
I have one. This is
There
Jim
is one now.
Dunnigan. To the representative from AHIP, do you have suggested language or sample language?
Well, we don't, but we'd be happy to work on some with the sponsor if she's amenable to that. Again, my recommendation is that section be removed, but we're happy to work with the sponsor however she'd like to.
I'll just make a comment on that.
Brendan, do you know if there are any members in your plan who are in agreement with the language that I just mentioned?
Any of our member companies? I've
Yes.
heard from any member company saying that they are okay with this language.
Okay.
So a comment, when we say payment equity, that implies equitable payment for similar services. So if we're going to reimburse a provider, if I'm seeing them in person in an office, is that the same equity as if I'm getting a telemedicine visit from him? I don't think so. I think it's important to maintain the cost savings and the lower price point for telemedicine to make it more cost productive and cost effective for consumers. So hopefully we can take a look at that.
Thank you.
Madam Chair.
Yes.
Yeah, I have a couple of comments on that, and I appreciate what I've heard. I think that the way the language is structured essentially makes it clear that what we're talking about here is equal pay for equal work. And if that condition is not met, then that's not what we're talking about here. So the idea of, it is about value, but telemedicine is not about just making things cheaper. Telemedicine, primarily in states like mine, is about leveraging the existing provider pool we have to be able to provide the same level of services at places that are distant, difficult to access, or communities that are small that would not necessarily support specialty level providers in those communities. And so I think for those of us that represent states that have a lot of rural communities, I think it's important we recognize that this is not just about saving money. This is about expanding access. And the degree to which we can entice more providers to embrace the technological advances of telehealth in order to expand access to underserved communities should be, I think, the most important thing that we look at here. This isn't about making healthcare cheaper per se. That doesn't mean that there aren't circumstances where services provided over telehealth are not of equivalent quality or level of service. In other words, if I have somebody coming in and I'm just doing a medication follow-up for their diabetes management, I would argue that the same level of service can be provided electronically as could be provided in person. However, if someone is coming for a new diagnosis of heart failure or something that would require me to physically examine the patient in order to accurately assess what was going on, that is not the same level of service. So I think the model that you have before you, the language does strike that balance. And so I think it's important that we recognize that this is really about whether or not the same condition, same level of service is being provided, which is what I think this does. So
Thank you. Thanks, Tom.
Yeah, appreciate that.
Assemblymember Cahill.
Hi, everybody. I just have two primary concerns here. I would disagree with the representative of AHIP that it's a good idea to leave the contract. That will just perpetuate the uneven relationships that exist between health plans and providers. There are places where there are few providers who could extract a premium for telemedicine and in fact force patients into telemedicine where that might not be the appropriate venue for their care. Just as likely, there are places where health plans are dominant in a marketplace, and they could force, if a provider wishes to participate, a circumstance where they would have to accept a significantly reduced telehealth rate, even if it was not warranted. The one thing that I said in the past when we discussed this is that to do this bill alone, and I hope, Madam Chair, between now and July, now and November, we can do this. To do it alone without a companion for network adequacy, I think would make a large mistake. We have to put the check in there to make sure that it is the patient, the consumer, the member, the subscriber who comes first in every instance. And this is not about making healthcare necessarily cheaper. It is always about making sure that healthcare is accessible, that it's quality healthcare in every instance. And yes, of course, affordability is also a consideration. So I would urge against what the honorable representative of AHIP had to say today in terms of leaving it to contract. And I would also suggest that it shouldn't be done at all without a companion bill for network adequacy. Thank you.
Thank you, Kevin. Is there anyone else? I don't see any other hands raised. Is there anybody in Charleston?
Senator Hackett here at the table, Madam Chair.
Yeah.
Senator?
Yeah, and this is something we've really dealt with for a long time in Ohio. One of the things we've done is we have postponed getting the final bill passed just because we're still in the pandemic. And there's no expert, Doc can affirm this, there's no expert that forecasted how much telehealth would be used that was even close to being right. The amount of telehealth that's being used in Ohio is just phenomenal compared to what it was. And so a lot of depends on how the quality of healthcare is, and it's still too early to tell how well telehealth is done. One of the reasons why I support the AHIP model is because when you talk to some of the providers, they talk about the initial cost of putting a telehealth system in, and sometimes you will see examples of cases where the providers will be okay with payment parity in a situation because otherwise it wouldn't get done. And I agree with Doc the way he says that. But in the same token, though, you still have to look at what's the type of system, because I think the providers can work it the other way also. You give the ability to the provider to make the final decision, and that's dangerous in itself because many times they're going to look at to say, hey, we want paid equal dollars for what we're doing. And so that's the only thing that, that's why Ohio is delayed making the decision on telehealth, because all the rules that we were passing the bill have been passed administratively now. Our Medicaid rules are there, our commercial rules are there, et cetera. So really all we're doing is codifying administrative rules that have been passed since last fall. So that's the only question that I say is, I'm one of those proponent to let the negotiation between the provider and the plans to work this out, because I can show you examples of cases where the provider will have it equal, and I can show you examples of cases where it doesn't make sense for there. So, we just have to be really careful on how we set this bill up. We really do. So thank you for allowing me to comment.
Thank you. Representative Ferguson?
Yes, and I know I've said this before, and Arkansas already has a telemedicine bill that requires parity for in-person and telemedicine visits. There's already a framework for paying this. It's called CPT codes. The CPT codes define exactly what payment is prescribed for a 15-minute visit and what goes on in that visit. So there are already prescribed elements to filing a CPT code for whatever visit it is. So there's really no reason to penalize someone for doing that visit telemedicine instead of in person. But just, I know I've said that before.
Not seeing any other lights in the room, Madam Chair.
Thank you very much. Okay. Well, obviously we still have a little work left to do on this, and we will continue that work. We're going to move, and thank you all for the comments. We're going to move on to our continued discussion in the NCOIL Model Act regarding air ambulance patient protections. We do have a couple of attendees to speak today. We did have a great discussion on this model at our last meeting in December. Since then, there's been much talk about the model that's been introduced in several different states, and it may also be impacted by the new federal balanced billing law, as well as a recent Eighth Circuit Court of Appeals opinion. The model is in your binders on page 307, and the Eighth Circuit opinion is on page 310, if you want to take a look at that. And you may have received in the past hour an email update of some amendments to the model, which will be discussed today. But this model is not finalized, and it won't be finalized until our next meeting. We will not be voting on this model today. We're going to get some introductory remarks from both of the sponsors, Representative Oliverson and Delegate Steve Westfall, before we go to our speakers. So if we could please recognize West Virginia Delegate Steve Westfall first, please, and immediately after Texas Representative Tom Oliverson.
Thank you, Madam Chair. There's certainly been a lot of action surrounding the issue since we last met. As Chair Hunter noted, in addition to the enactment of the federal balanced billing law, the Eighth Circuit Court of Appeals did in fact issue an opinion which ruled that the North Dakota statute seeking to regulate air ambulance membership products as an insurance was preempted by Federal Airline Deregulation Act. However, I'll let the speakers and we have here today address this specifically. I believe, in my opinion, the Eighth Circuit laid out how a statute such as the model could survive federal preemption. Accordingly, I've introduced amendments to the model, which you have before you today, and I believe aligns with the Eighth Circuit opinion. I introduced this model act in my home state of West Virginia this year. It passed with overwhelming support, bipartisan support. It's currently pending on the governor's desk. That's all I have right now, Madam Chair.
Representative Oliverson.
Thank you, Madam Chair. So we have also introduced the Model Act in Texas. We are still working on that Model Act in good faith with all the stakeholders. I think at the end of the day, what we will probably pass in Texas may differ somewhat from the Model Act in that it will primarily focus on disclosure language, or what we're sort of referring to as the cigarette warning label, for lack of a better term, although I don't mean that in any kind of derogatory way. That's just sort of kind of what it reminds me of. You know, I've heard from folks in my large rural state here of Texas on both sides of this issue. I think our general feeling of my colleagues in Texas is that we want to be clear that this model policy is designed and that our legislation in Texas would be designed just to inform consumers so that they can make decisions and let them know about their options, but at the same time, to be very clear that the state is essentially, these are two competing business models, and that the state is essentially very neutral on that issue. We're not here to pick winners or losers, but we just want to make sure that consumers know what they're getting into ahead of time. And so I think that's the direction that we're heading. My only ask of the committee today would just be simply, you know, we can obviously entertain and adopt amendments, but I would humbly ask that we postpone the adoption of the model as a whole until after the legislative work in Texas has had a chance to play out, because I think that will give us a good perspective as a committee of having, you know, legislation now passing in two different states addressing the issue. And I think that would be very informative to the model in its, you know, when it gets to its final form.
Thank you, Representative. Based on obviously your comments and the court case that we have a decision from and amendment, there is again not going to be a vote on the model today. And based on our bylaws and some of the comments put forth, I guess, in the amendment, I'm not going to be putting forth a vote for that amendment today as well. I think that it will give everyone an opportunity to take a great look at the amendment. Obviously, wait to see what happens in Texas. West Virginia obviously had their vote, and we want to be purposeful and doing our due diligence on this model going forward. And I just want to make sure we put that out there. If you don't have any other comments, let's hear from Chris Myers from Air Methods, and then we will hear from the Honorable Eleanor Kitzman, who is a former South Carolina and Texas Insurance Commissioner, who also is representing from GMR. So can we get Chris Myers from Air Methods Corporation up next, please?
Is that live? Great. Chair Hunter, Vice Chair Ferguson, members of the committee, my name is Chris Myers. I'm the Executive Vice President of Reimbursement for Air Methods, and I'm glad to be back here with you today. Thank you for the opportunity to appear before you to continue our discussion on this important topic. Since we last met, there's been a key development that directly affects this Model Act and how consumers interact with membership products. The No Surprises Act was voted into law and will become effective on January 1st of 2022. This law significantly changes the landscape of the U.S. healthcare system and dramatically decreases the financial risk for patients as it prohibits the practice of balanced billing. To be clear at the outset, I am not here today to argue against the prohibition of memberships, but instead for the appropriate regulation of them so that consumers are not deceived by what they are purchasing. Air Methods continues to believe that the best way to solve for the patient financial burden is to go in-network with payers. We have led the industry in doing just that and have in-network agreements with almost every payer in every major state. And we continue to work very hard to bring the big three payers, United, Aetna, and Cigna, into network as well. The implications of the No Surprises Act make this model even more important because of the following. Memberships are largely obsolete starting January 2022, as they have been marketed to cover patients' financial exposure to balanced bills, which again will be prohibited in less than 9 months. These products are now marketed to cover only copays and deductibles. One must ask, how does this factor into the federal government's prohibition to cover only prohibition on routine waiving of copays and deductibles under the False Claims Act, the Anti-Kickback Statute, and the Civil Monetary Penalty Law? Given emergency air medical transport is also bookended by a continuum of care and value to consumers in covering copays and deductibles is actually determined by the insurer, it's subject to when an air ambulance claim is submitted and what amount of financial responsibility remains on a consumer's policy. Memberships offer far less financial value to customers now than they did previously, since they only cover copays and deductibles. Companies that sell memberships believe these products operate above state law. However, states can and do regulate air ambulance memberships subscriptions. Good examples of this are Florida and New York, and most recently what we heard about in West Virginia. Importantly, there are several areas of consumer protection for state regulators to consider. Payment to cost ratio decreasing. Will consumers be charged fair premiums? Interaction of memberships with the patient's main health insurance policies. How will regulators ensure that these products add financial value for the policyholder and are not merely duplicative coverage? Sales of memberships to consumers who have no real need to purchase them. We already know that 35% or more of consumers who purchase these are Medicare beneficiaries. When comparing the data that was provided to NCOIL with the data from NAIC and AHIP on the US Medigap market, the largest membership product in the United States, AirMed Care Network, is technically the second largest Medigap product sold in the United States, second only to United Healthcare, but without any regulatory oversight at the state or federal level whatsoever. What about the additional consumers who truly will not have any out-of-pocket financial risk starting in January because of the No Surprises Act? Because membership policies are completely unregulated, there is no state or federal oversight to prevent consumers from being taken advantage of in the case of being sold membership policies by fraudulent companies. Last time I spoke to the committee, we discussed Helimedic, which masquerades as an air ambulance provider and air carrier, but doesn't seem to actually exist. Yet you can Google their website right now and buy a membership from them that claims to cover you and your family from anywhere in the United States. Confusing and deceptive practices buried within the fine print of membership should be reviewed to determine if they truly are in the best interest of the policyholders. For example, disclosures for Medicare and Medicare beneficiaries shift the burden to the consumer to certify they are Medicaid beneficiaries. What about adding disclosures for the No Surprise Act? Membership contracts sign away the consumer's first lien rights so that any settlement received from an auto or homeowner's insurance, for example, must first go to pay the full billed charges of the year medical bill. Terms and conditions also allow for auto renewals in perpetuity without consent or refunds. How will consumers that realize that they no longer can be balance billed next year be able to get a refund after the No Surprises Act is enacted? And to which state agency do they go for recourse if they cannot get a refund? Some of the policyholders have been so scared to the potential financial burden of a balance bill that they have actually delayed care to be transported by their membership provider in a medical emergency versus the closest and most appropriate provider. Memberships are indemnity products. Copays and deductibles are set by a third party, the payer, not the provider. In fact, a January 6 handout entitled, quote, HR 133 Membership Matters Talking Points, end quote, GMR states, no air company can predict individual out-of-pocket costs as those are determined by insurance companies. Indemnifying the policyholder against costs determined and set by a third-party entity is dispositive of the insurance question. Air ambulance memberships engaging in this activity clearly fall within the business of insurance. The data filed in Air Evac versus Dodrell in February of 2021 shows that these products are pooling risk like an insurance product, not prepaying for services. The patient cannot call an air ambulance and has no choice in the matter. For a membership to be considered prepayment, the consumer has to have a reasonable expectation that they will utilize the product. Yet you and I have a higher likelihood of dying of heart disease than we do being transported by an air ambulance. Air Evac versus Dodrell showed similar utilization amongst consumers who had purchased an air ambulance membership. In this case, 0.2% of these individuals in West Virginia used their membership. There's been a lot of confusion about the recent appeals court decision in Guardian Flight versus Gottfried in the 8th Circuit. State legislators and regulators have been told that this decision prohibits them from taking any action on regulating memberships because of the Airline Deregulation Act. However, this is not completely accurate. Guardian Flight found that a state law enacted, quote, for the purpose of regulating the business of insurance, end quote, falls under the reverse preemption of the McCarran-Ferguson Act. Hence, legislation like the proposed NCOIL Model Act on air ambulance memberships, including the amendment before you today, are permissible and appropriate, ensuring meaningful consumer protections for air ambulance membership products. The proposed NCOIL Model Act and the amendment before you takes a targeted, narrow approach to appropriately regulate the business of insurance and protect consumers from predatory marketing and sales tactics. If membership products are simply prepaid services, then they should be just that, and the economics should support it. However, after January 1st, 2022, the only possible prepayment is for the copayment and deductible. It is important to remember that based on the timing of service, when the claim is filed, that there may be no copay or deductible. Additionally, when the provider seeks reimbursement for these services from a third party, then they become a Medigap product. One final point to make is that there are much better ways to solve the financial burden that a patient may face. At Air Methods, our average out-of-pocket expense for all patients is less than $165. And in the case where an individual cannot afford to pay that amount, we use specific financial information from the patient to qualify them for an appropriate discount. We continue to support this proposed Model Act and the amendment before you as a way to give states a tool to help consumers to ensure that the coverage they are buying is not duplicative or deceptive. The proposed NCOIL Model Act takes a targeted, non-prohibitive approach to appropriately regulate the business of insurance and to protect consumers from the predatory marketing and sales tactics. Thank you for your time today.
Thank you, Chris. Can we now hear from Commissioner Kitzman, please? Then we'll go to questions.
Madam Chairman, Vice Chairman, and members of the committee, I'm Eleanor Kitzman, and I am an insurance regulatory consultant in Austin, Texas. I represent Global Medical Resources, or GMR, in connection with this proposed Model Act regarding air patient ambulance patient protections that would define membership subscription agreements as insurance contracts and the air ambulance service providers selling such memberships as insurers and subject to regulation as such. We oppose the bill as originally filed and the amendment that has been discussed. This is simply not insurance. This is not an insurance contract, and the Eighth Circuit has said expressly that. GMR operates the Air Medcare Network, or AMCN, is the largest membership program in the U.S. with 3.5 million members in 38 states with 320 locations. I have a copy of the application, and the terms and conditions has been provided to all of you. Many of you have seen this before, but I wanted you to be able to see the fine print referred to by Mr. Myers for yourself. I particularly want to draw your attention, to a few things on the application. The first is in section 2 that asks for the names of all members of the household. This is because a single membership covers all members of the household for the same price. The second is in section 3, the membership and payment options. Monthly memberships are only $9 and an annual membership is $85 or $65 for applicants over 60 years of age. In addition to the terms and conditions that are printed on the application, I've given you a little bit larger copy of it because there's some important aspects of that I wanted to highlight as well. A membership ensures that the patient will have no out-of-pocket expense if flown by a company providing prepaid protection against a company's air ambulance costs that are not covered by a member's insurance or other benefits or third-party responsibility. The patient's medical condition, not membership status, will dictate whether or not air transportation is approved and required, or is appropriate and required. An AMCN provider ambulance service may not be available when requested. In return for payment of the membership fee, the AMCN provider will consider its air ambulance costs that are not covered by any insurance or other third-party payer to have been fully prepaid. Membership is not an insurance policy, and neither the company nor Air Medcare Network will be responsible for payment of services provided by another ambulance service. By applying for a membership, the applicant certifies that they are not Medicaid beneficiaries. I want to also point out what is not in the application and the terms and conditions. Any restriction on the number of transports, any questions regarding health condition of the applicant, any questions regarding health insurance that could provide a source of payment to the air ambulance provider. In summary, this means that everyone in the member's household is a member that can receive unlimited life or limb-saving air transports for as little as $9 per month, whether the member is more likely to require transport based on a medical condition or has insurance. The No Surprises Act has been mentioned as an important development, and it is. And GMR was involved in discussions on that legislation, and that is a good thing for consumers. But it only eliminates one component of healthcare's cost-sharing features, and that is any balance bill, any amount that the air ambulance provider has billed to the insurance company that is not paid by the insurance company. It does not eliminate or reduce deductibles, co-pays, or co-insurance, and it provides no protection to consumers who are uninsured or whose transports are deemed not medically necessary. Air Methods has argued that going in network is the better way to reduce out-of-pocket expenses. But being in network and having a membership is not mutually exclusive, and memberships still provide valuable benefits. We are in network with 139 insurers and negotiate with companies on a regular basis to come in network with even more. But that only affects the amount paid by the insurer to the air ambulance provider. It does nothing to reduce deductibles and copays, which will continue to apply. Air Methods has also argued that deductibles and copays exist as a means to discourage overutilization and should not be routinely waived or forgiven. I'm not exactly sure how life or limb-saving air ambulance services dispatched by a third party could be overutilized by a consumer. But I also disagree with the premise that a consumer should not be allowed to voluntarily purchase a product that could protect his or her family from the potentially high cost of these deductibles and copays as a result of a medical emergency over which they have no control. This seems a much better option for consumers than relying on a charitable fund for patients to assist with out-of-pocket medical expenses as promoted by Air Methods on its website. And speaking of deductibles and copays, there is another cost-sharing feature contained in many health insurance policies, which has not been mentioned, and that is called coinsurance. Coinsurance is an amount, usually a percentage of the covered amount of the claim that is coinsured or required to be paid by the patient, in addition to any deductible or copay. According to the Kaiser Family Foundation, the average coinsurance requirement in 2019 was 18%. Also, according to the Kaiser Family Foundation, 81% of health plans have a deductible. 24% of those are high deductible plans. The average out-of-pocket expense for high deductible plans for each air medical transport is $4,332. Again, deductibles, copays, and coinsurance apply regardless of how successful an air ambulance provider's negotiations with an insurer may be. Air Methods has also argued that a Medicare enrollee does not need a membership plan because Medicare fully covers air ambulance services. This is only true if the enrollee has purchased Medicare Part B, which is optional, and there is still a 20% copay, which based on Medicare's average payment for air ambulance services averages $1,160, which is over 17 times the $65 membership fee for seniors. I'm sorry, that's not right. Somebody else do the math on that. It is possible that a Medicare supplement policy could cover this copay. And we include an FAQ on our website advising consumers to check their coverage. Again, according to the Kaiser Family Foundation, 6.1 million Medicare beneficiaries had no source of supplemental coverage. Our programs provide enormous benefits with little to no downside to consumers. If a member is transported by a third party, his or her membership does not apply, and he or she is not disadvantaged because of their membership agreement. If they're transported by a network provider and is insured, we pursue payment of the reasonable cost of the transport from the member's insurer only. The member will never receive a balance bill. And any payment of the deductible, copay, and coinsurance, which would be far more than the cost of membership, are canceled or waived. If a member is uninsured, the entire transport is covered by the membership agreement. I also want to address some of what has been said about the need for consumer protection. Supporters of this bill claim that it is needed to protect consumers from purchasing a product that they do not need or understand. We believe that our 3.5 million members who have made the decision to purchase the peace of mind provided by membership are capable of assessing their needs. The overwhelming majority of new memberships are not purchased face-to-face through a pushy salesman. Rather, they are purchased through direct mail, digital, or other channels in which the consumer has ample opportunity to research the product and make their decision without any sales pressure. Over 45% of our members have had their memberships for over 5 years. In fact, 800 of Air Evac's original 5,000 members still have their memberships today. It would be insulting to imply that our members have been duped all these years. Supporters of this bill have also made a lot of allegations about unscrupulous and misleading sales tactics, confusion among consumers, delays in transport. They use the arsonist firefighter analogy. These allegations are always couched as this is something that could be happening. It might have occurred. Consumers may think, and the like. They've not cited a single specific example of any of these things actually occurring. I've listened to testimony in some of the states where similar bills are pending. Most recently in West Virginia, where there was a physician who testified, and I listened to his testimony a couple of times because I thought if anybody was going to be able to cite a specific example, he would be the one. But again, it was couched as this could happen. As a former regulator, one of my biggest concerns is complaints. And when I took on representation of GMR and AMCN, that was one of the first things that I explored, both internally and externally. I'm not saying there's never been a complaint anywhere, but I haven't found the evidence, and apparently neither has anyone else. We believe the more appropriate way to address consumer protection concerns, especially with respect to a product that has been around since 1985 and that does not endanger a consumer's life or health, is through robust disclosures, which we support in the model bill and are working on with Representative Oliverson's office in Texas. Most of these disclosures are already in our terms and conditions, and we support making them more prominent. Insurance is not the only way to provide disclosures. Finally, there's been a mention of the Eighth Circuit opinion that and there is the amendment, the West Virginia amendment, and I believe the amendment that has been offered by Delegate Westfall has been interpreted in such a way as to invoke kind of this reverse preemption under McCarran-Ferguson Act and to achieve the result that they would like, and as represented in that amendment. But what's being ignored is the court's express language that, quote, subscription agreements are not insurance contracts. The Eighth Circuit reversed the lower court holding that there was reverse preemption under McCarran-Ferguson. An insurance contract is the starting point for reverse preemption under McCarran-Ferguson, but it is only the starting point. The statute must be enacted for the purpose of regulating the business of insurance. The purpose of this bill is not the regulation of the business of insurance. It is for the purpose of regulating a business model that some do not like or agree with. And we believe that is wholly inappropriate. We support all of the consumer protections, disclosures, and the like, and are happy to work with the states and with this committee to fully protect consumers. But we believe that the consumers should have the option, that we should not be going about taking choices away from consumers when we're talking about very high expenses. So again, we would very much like to see a version of this bill as Representative Oliverson along the lines that he outlined, and be happy to answer any questions.
Thank you, Commissioner. For those on Zoom, if you could use the raise hand function if you have questions, and I will have Will and Tom be my eyes in Charleston. I just want to make mention that we are joined by Representative and President Matt Lehman from Indiana and Representative Carl Anderson from South Carolina, both present in Charleston. And we have on Zoom Senator Lana Theis from Michigan. So I do see Jim Gooch's hand raised. We will go to you first, please.
Thank you, Madam Chair. My question is for Chris Meyer. And the question is obviously you're in favor of the Model Act. So Air Methods believes that passing this Model Act will help and I guess have some financial value for your organization. I'm just wondering, is that based on your belief that it might help with competition, is competing with other air ambulance providers, or is it your ability to negotiate with providers to be able to do some contractual arrangements with them? Does it have to do with reimbursement rates, or what do you see as the benefit of this act as far as Air Methods is concerned?
Thank you for the question. We see this as an issue that has been problematic for the industry, like a lot of the historical practices in the industry, whether that was historical aggressive billing practices, whether it was the practice of balance billing, and this because it fans the flames of financial uncertainty for patients. So our interest is around the impact on the patients, and that is why 5 years ago, we started a patient advocacy program. It's why we stopped balance billing well before there was any discussion about a No Surprises Act. It's why we have continued to go aggressively in network. And it's why our numbers speak for themselves. You don't have to buy a membership in order to have a low out-of-pocket, which for us is $165. So we believe it is a bad practice for the industry, regardless of what that may mean for Air Methods specifically. It creates fear for patients around a situation that probably won't occur given the 0.2 utilization rate, which is unnecessary and unproductive. And we think capitalizing on that fear for individuals is not good.
Is that all you had, Jim?
Yes, thank you, Madam Chair.
Okay, very good. We are going to go to Steve Westfall next. Please use hand function if you're on Zoom, please.
Thank you, Madam Chair. I've got a couple of questions. Proposed NCOIL model is not prohibited on the air ambulance products and does not aim to restrict their ability to consumers. But it's your opinion, your position, that states cannot regulate air ambulance memberships products in any way? If yes, based on what? And if no, based on what kind of state regulations, consumer protection are appropriate for these products?
I think we're opposed to regulation as insurance because we just believe that it is not insurance. We also believe, as courts have held many times, that the Airline Deregulation Act preempts any state regulation of anything related to rates, routes, or service. And beyond that, there aren't cases dealing precisely with this issue, but we are supportive of the consumer protections, the disclosures, in this bill. There are laws that in other states that have provided some disclosure requirements and consumer protections. The recent, Wyoming recently amended their statute, which a few years ago had classified membership products as disability insurance, but they have amended that statute. They are no longer defined as insurance products, and there are quite a few, disclosure requirements and consumer protections in there. So, and we have, GMR was involved in the discussions and the negotiations on that bill in Wyoming.
Okay. One further question. Do air ambulance membership subscriptions cover a patient's copay and deductibles associated with the air ambulance transports? If yes, are copays and deductibles determined and set by a third party such as an insurance provider?
we don't, we certainly don't set them. And what GMR does is if it's a membership, whatever the insurance company pays for that transport, that's the end of the transaction. There is no, there's no negotiating with the member. There's no further action that is taken. Any charges that might otherwise have applied are canceled or waived.
Okay, that's it, Madam Chair. Thank you.
Thank you. Bart Rowland is next, please.
Thank you, Madam Chair, and I appreciate Delegate Westfall pointed out that nothing in the bill says that these products, should it become law, could not continue to be sold in the future. All it does is attempt to increase transparency, which I'm glad to hear that Commissioner Kitzman is in favor of, and adds regulatory authority to our state regulators, which I don't understand why we wouldn't all be for that. It's good to hear we don't have bad actors today, but what if we had future bad actors enter into this product? And we should give our state regulators the ability to get a handle on them. My question is to Commissioner Kitzman. We're all familiar with products sold by Aflac, Colonial, Transamerica. We've all seen these products. They're sold to take care of very specific incidents. You buy an accident plan to take care of an accident. You buy a cancer policy and it pays you in the event that you come down with cancer. You buy an intensive care rider or gap policy and you get paid should you have a heart attack or a stay in a hospital. How would you describe an air ambulance membership, which is bought for the very specific event of a ride on an air ambulance? How do you draw the distinction between those supplemental policies and one of these memberships?
Those policies, first of all, provide indemnification of expenses incurred by the policyholder to a third party. And Air Medcare does not provide indemnification of a third party. It does not provide indemnification of the member in any way. It provides a service, period. And if I could just also say that yes, we support the consumer protections, disclosure, increased transparency. Insurance it doesn't have to be an insurance product to do that. There are other ways to provide some oversight into that, which we believe is a better, less onerous way to do it, especially since this is in my opinion, in our opinion, is just does not meet the definition of insurance. And the Eighth Circuit agrees with us.
Just one comment I would make that you referenced about potential bad actors. They exist today. The Heli Medic example I raised, I would encourage you to go on their website. It's a company that has no real air ambulance operations selling memberships to individuals today without any really ability to provide the service. So we are living already with bad actors in the space.
If I could respond to that. After hearing about Helimedic, we also have tried to find out a little more about this company and have been able to find out very little. And however, we already have laws on the books. There is already a remedy for what they appear to be doing, and it is through attorneys general and through the fraud statutes, unfair trade practices laws that are already on the books. And if what they are doing is, as is being alleged or implied, there are already laws against that, and they're in violation of them. Calling this an insurance product is not going to deter an operation like that.
Thank you. I don't see any other additional hands raised. Oh, I do. Deanna Frazier, we have hand raised.
Hi, thank you. Yes, I do have one question for the commissioner. Some states like Florida regulate these products as prepaid limited health service organizations. And does GMR view Florida's regulation of air ambulance products appropriate, or do you plan to pursue legal action against Florida?
I have no knowledge of what legal actions, anyone may or may not be considering. I believe Nebraska also regulates it as a discount medical product. GMR operates membership programs in both of those states, I believe. So the extent of the regulation is such that we're have been happy to comply with it and are able to operate there, under our usual business model.
Thank you.
Senator Paul Whelan from Missouri is up next, please.
Thank you. Just to follow up with that, so you'd be comfortable with other states adopting what Florida's done.
I haven't studied the Florida statute specifically. So all I'm saying is that the GMR is operating in Florida. I think there probably are a number of state laws that if we were starting from scratch, that's not the way that we would do it. But we're able to, our business model works, under a number of different approaches that states have taken.
Thank you.
Are there any other questions from legislators?
Yes, Jim Dunnigan. For the GMR, the AirMed on that product, what is the loss ratio? What's your loss ratio?
Well, because it's not an insurance product, I don't believe that a loss ratio is something that is calculated in the way that you would for an insurance product. But I actually don't know. I don't have knowledge of that, but that's so I'm not able to answer that question. I just would note that it is that's an insurance concept, and this is not an insurance product.
Well, let me ask it another way. If you took your subscription fees and subtracted your claims, what's that ratio?
I don't have that information.
Could you provide it for us? Could you get it for us?
I'll certainly look into it.
Thank you. One other question. Do you think the legislators are precluded from perhaps expanding some of the pieces of regulation on this so it could be more considered insurance and qualify under McPherson? I mean, I'm just reading the court case, which is interesting. The court's the court, but certainly some of the things that they're talking about, balanced billing, those are all integral parts of insurance. So I guess my question is, do you think the legislators are precluded from fleshing this out in a more regulatory scheme so it looks more like insurance and calling it insurance? Or do you think that would qualify under this rationale of the Eighth Circuit? Instead of just going after balance billing and other things, could we regulate different pieces of it?
Well, no, I don't think so, because just calling it an insurance product doesn't make it an insurance product. But even if it would meet a definition for an insurance product or an insurance contract, that's not enough for McCarran-Ferguson. The statute has to be enacted for the purpose of regulating the business of insurance, and this is not. We are not in the business of insurance. The membership product is is incidental to our business. It's a part of our business, but it is not an insurance product, and we're not in the insurance business. So I don't think that kind of further attempts to sort of shoehorn this into some definition of an insurance contract really gets supporters of this bill where they want to get to.
Thank you, Mr. Chairman, or Madam Chairman.
Thank you. Are there any other questions or comments from legislators?
Madam
Chair, this is Representative Oliver.
Carl Anderson from South Carolina. I'd just like to ask her, a question or maybe make a statement. It appears that y'all are afraid of something. Could you tell us what you are afraid of?
It's not a matter of being afraid of something. It's that we just don't believe that it is an insurance contract. I don't think anyone is going around asking to be regulated as something that they are not. It would also, create a situation where some air ambulance providers are regulated, as insurance, and others are not. And we believe, and having been in this business for a very long time, having a very good track record with it, having lots of of happy customers, seeing no evidence of of complaints or anyone actually delaying transport or medical care. That this is this is worse than a solution in search of a problem. This is a competitor in search of an advantage. We have a business model, that they do not, and that some do not agree with, and that's their, prerogative. But they're. I'll go back to what I said earlier, that it's would be highly unusual to prohibit a product that is, first of all, that has been around as long as this one has, with the track record that we have, when what's being complained of by supporters of this bill, not any consumers that we're aware of, can be handled in a less onerous way. And certainly we want our members to be informed. We want them to buy this product because they believe that it adds value. And I think the fact that 45% of our members have been with us 5 years or more speaks volumes. I think anyone that deals with consumers would be very happy with that.
Thank you, Commissioner. We're going to go to Senator Raper and then Representative Oliverson. I'm going to go to you to close. We do have 2 other things on our agenda. I actually am going to ask, since we have had exhaustive conversation here today, ask our executive team at NCOIL to put together some sort of legal panel relative to the impact of this 8th Circuit decision and perhaps the likelihood of a Supreme Court action. We could either do an interim Zoom on this, or we could hold it over to July. But if we could get that in the meeting minutes to make sure that that gets taken care of, Tom, and we can go to Senator Raper, please, then Tom Oliverson to close. Thank you.
Madam Chairwoman, I'm sorry to interrupt. May I respond to Delegate from South Carolina's question?
2 minutes, please.
Yes. I just wanted to respond to say this is not about competition. We could sell memberships if we wanted to today. Historically, Air Methods did have some memberships. We chose not to sell them. So this is not about us not being able to compete. We're happy to compete on service every day. This is again about not exploiting a bad practice and taking advantage of people's fears around a devastating potential devastating financial issue with them. And that's why we don't do it. Thank you.
Thank you, Madam Chair. My question, and obviously there's going to be a lot more discussion about this issue, which is good. And I've had different issues in and out of my ears, so I may have missed this. If I did, I'm sorry. But is any current actions right now in this space on air ambulance services, is that being handled by the Attorney General under deceptive trade practices, or are there even any active cases?
We're not aware of any.
Okay. Well, just for comments for further discussion later is that I just think we always need to be careful about trying to pick winners and losers in our individual states and even at this particular venue. And this body, I know I've been here 10 years now, and we have the absolute ability and the willingness to go out there and make sure that there's a fair and level playing field out there. But I've never seen the body get into necessarily picking winners and losers and deciding what is good or not on the free market. And so I look forward to more information on this, and definitely appreciate the chair and the vice chair for all the work that has been done in this arena. And we'll look forward to the next meeting. Thank you.
Thank you, Senator. Representative Oliverson to close.
Yeah, thank you, Madam Chair. I do want to say one thing, because we've heard this now 3 times. I want to let the committee members know that in our testimony in Texas, when we heard this bill, the issue of HeliMedic was brought up, and within a very, I would say within 4, I don't know when my office received, I think it was within 48 hours, we received a letter from the CEO of HeliMedic identifying them as a European company with a long track record that is seeking to do business. I have been to their website. I don't know how to buy a membership on the website. I've tried, I can't. There have been news reports of people calling the number and getting a hold of somebody. I just want that Tom Considine has a copy of the letter I received as chair of insurance from the CEO. And I just want to be clear, that I think if we're going to use a company as a specific example like that they should have an opportunity to defend themselves. And they've attempted to do that by reaching out to my office. And I think it's fair for the members to hear from them as well. So it's regretful that we keep bringing them up as an example. They have reached out to me in Texas and have been very upset with the things that have been said about them. So I want to make that clear. Again, I think this model boils down to a couple of things. I think we're all in agreement that at the end of the day, we don't want to pick one side over the other. We simply want consumers to know what they're getting into, right? If a consumer thinks there's value in a membership, so be it. But they should also be aware that they may be signing up for something that they don't actually need. And that should be made clear to them. And I think the second issue with respect to the 8th Circuit, which by the way, Texas is not bound by a decision of the 8th Circuit, nor is the majority of the United States, is whether or not something has to be classified as insurance in order for state law governing disclosures to have any real teeth behind it. And I think that's the question with respect to fully support your decision on this to get some legal advice and counsel, because I can tell you in Texas, the thing that we're trying to work through right now is I think we know what we want to do. And I think both sides don't really object to the idea of disclosure. The question really is whether or not the disclosure is meaningful without the conversation on insurance. And I think that's kind of what we need to focus on in the next couple of months. But I appreciate everyone's time and willingness to work on this. And I have to say that I've been very appreciative of all the stakeholders. They have all come to work with me in Texas. They've been very respectful of each other as well as of my office and really trying to be constructive. And I do believe if we could just keep working on this, we'll get to something that NCOIL can be proud of. Thank you, Madam Chair.
Thank you, Tom. And thank you, Delegate Westfall. As I said, we're going to be having a conversation in the interim before we get to July to see how we move forward. Obviously, we have the amendment, and then we'll convene at some sort of legal panel to kind of work through some of these outstanding issues. Thank you, Chris Myers and Commissioner Kitzman, for your testimony here today. Our next agenda item is a discussion on all co-pays account coalition accumulator adjustment program state model language. I know that was a mouthful. It is in your books on page 317. I want to note that this model language is not before you for consideration as an NCOIL model law, but rather as model law language developed by the All Co-Pays Count Coalition. And this is just meant to be discussion. This discussion is meant to be educational only. So joining us today is Steve Schultz of the Arthritis Foundation and Brendan Papard, again from AHIP. If we could hear from Stephen Schultz, please.
Yes, thank you very much, Chair. Thank you very much, members. I'm going to quickly just share my screen here in a second. Perfect. Again, I appreciate the opportunity. My name is Stephen Schultz, Director of State Legislative Affairs for the Arthritis Foundation, and also representative of the All Co-Pays Count Coalition, a group of patient and provider organizations that's working on a solution to accumulator adjustment programs really across the country on a state and federal level. Likely a lot of you have heard about accumulator adjustment programs, not necessarily what they sound like. So happy to go over it again. Many chronic disease patients use copay assistance, whether copay cards, manufacturer assistance, to be able to afford their life-saving medications. Very recently, in the last several years, copay accumulators have become kind of common in insurance plans that really prevent any such assistance or third-party payments from counting towards cost sharing, such as the patient's deductible or annual out-of-pocket cost maximum. So the example that we often share is that the patient will continue to utilize their assistance and pay at the pharmacy counter, and eventually that assistance is going to run out. And at that point, they're going to find out whether at the pharmacy counter or wherever they're getting their medication that they still owe all of that cost sharing, usually in the middle of the plan. So usually it's a surprise to them because it's usually not kind of in bold language as far as disclosure to the patient. So they have to make the decision right there and then kind of how they will afford likely sometimes these very expensive medications. Like in our field, they tend to be biologic medications, which are thousands of dollars. And so likely because of that issue of affordability, patients will have to make the decision of going in debt themselves, finding another way to pay, trying likely another high price medication, or just not being adherent on their medication. All situations not extremely good. And so just going through some of the trends that we're seeing, like I mentioned, these have become increasingly utilized. The AIDS Institute partners within the All Co-Pays Count have been tracking these types of protocols and programs very recently. And they've shown that in all the states that don't have a restriction on these programs, there's at least one plan that have a copay accumulator adjustment program in their policy. 14 states have them in every single policy. So there's not even a case where a patient who is educated about these types of programs can kind of shop around and see and purchase a plan that doesn't have one. 32 states have at least 2/3 of plans that include accumulator adjustment programs. And then lastly, about only three states have fewer than half of their plans that have accumulator adjustment programs. So it is extremely prevalent and growing in prevalence. And I just show another study there as far as the trend that shows that even when discussing with the health insurers as far as their medical and pharmacy directors, they, in addition to the patient provider groups, there is a sense that this is being put in place to shift the cost onto the patients as opposed to the other folks in the supply chain. So the solution that we've adapted, you see our model language, the actual language of it is probably the simplest bills that you're going to see out there. They tend to be the shortest bills introduced in the states, and they're just simple as no matter who's paying for these funds, whether it's pharmaceutical manufacturers, copay assistance, whether it's a GoFundMe page, whether it's your aunt or uncle, that those funds, those third-party payments should be counting towards a patient's cost-sharing requirements. This language has been endorsed by our partners like the American Medical Association, American Cancer Society, Cancer Action Network, AIDS Institute, National Hemophilia Foundation, Cancer Support Community, and American Kidney Fund. And so just talking quickly, just the last two slides, I'll address the landscape of where these have been introduced. We've seen a great deal of success over the last couple of years, having it enacted in Virginia, West Virginia, Illinois, Arizona, and Georgia. This past year, Kentucky, shout out to the Kentucky delegation that's on the call or in the room, it was enacted just last month. There are a few states that are closing in on being enacted. It is currently on the governor's desk in Oklahoma. It's very close to heading to the governor's desk in Arkansas. It just has one last procedural. I wanted to give a shout out to Senator Rapert, who was the Senate lead on that particular bill. It's also passed the chamber in the House in Michigan and in Oregon, and closing in on floor votes in New York, Ohio, and in Tennessee. And then lastly, I'll say about the state landscape is that Representative Oliverson heard this bill in committee this past week. So you'll see it is becoming one of the most kind of introduced bills talked about throughout the country just because of the landscape. And then lastly, because of that, I just wanted to kind of address kind of what we kind of hear in the discussion, some of these hearings, and just kind of get in front of them as far as what we hear from opposition. It tends to be a discussion about assistance, kind of the merit of assistance rather than the merit of introducing and implementing these types of programs that essentially shift the cost to the patient. And it's more about kind of discussion about the assistance. Secondly, we often hear about the notice of payment, benefit of payment parameters from the US HHS, which does allow states to put these programs into place, but usually not mention the fact that in that same NBPP, they give the power to the states to enact legislation like the states that have enacted it, and have really pointed to these states that said, if you don't want to have these types of programs, pass legislation accordingly. Third, we often hear about plan design and how this type of assistance could circumvent plan design, which is just not true in the sense that to get on these types of medications that need assistance, you need approval from your insurance. You need to go through things like prior authorization. You need to go through things like step therapy that step your way up through lower cost alternatives, including generics, to be able to use assistance towards your insurance, which is the point of this type of bill, which is that we want to see this type of assistance applied to the insurance. So of course it has to be a medication that's approved by the insurance plan. Fourth, you often hear about generics, that this is gearing patients off of generics onto brand name drugs. And we often state that 99.6% of the drugs that have this type of assistance are for medications that don't have a generic, that are just brand names that don't have a generic yet. They likely can't have a generic because they're biologics that can only have a biosimilar. And then the second element of that is the element, like I've just mentioned with plan design, that the plans have plan design elements like utilization management tools to walk patients through lower cost alternatives before getting onto any type of medication that would have this type of assistance. That's the real heart of the problem that we're trying to solve. Second to last elements, we often hear discussions about issues that block this type of assistance, like Medicare and Medicaid, which are government entities likely not to be able to be kind of like for like comparison with private insurance, and then other states that have done things in this this space as far as copay assistance. And I'll mention Massachusetts, which has had some discussion about restricting assistance. They often point to Massachusetts as a state that bans assistance, which is not true. The state each year, or every other year, allows assistance to take place and sunsets it just because of identifying that assistance is crucial for patients to stay adherent. And even 7 of 9 plans in Massachusetts have accumulator adjustment programs. California, my state, I'm actually a constituent of Assemblymember Cooley. California, a couple of years ago, enacted legislation that restricted assistance for situations where patients haven't gone through step therapy, prior authorization, or generic equivalents, as a way of that argument of steering patients onto brand name drugs. The result of that, you would think, is no accumulators in the state of California, but that's incorrect. A majority of health plans in California have accumulator adjustment programs. And so that kind of dismisses the argument that this is more about accumulator adjustment programs or more about steering patients off to generics rather than brand name drugs. If that was the case, California would have no accumulators in their state regulated plans. And then lastly, and the last thing I'll mention today is premiums. We often hear that this somehow will drive up premiums if we ban accumulator adjustment programs. But since these are new programs that were just recently implemented in the last half decade or so, you can look at kind of where the status quo was before this, where assistance was being utilized without these programs, and where we're at now. And in none of these discussions in hearing rooms have we demonstratingly shown that premiums have gone down as a result of these programs. And even analyzing the states that have enacted legislation like Virginia, like in Arizona, we haven't seen premiums go up as a result of enacting this legislation. So that's all I'll say before another representatives of HAHIP will discuss it, but then happy to answer any questions that the group may have. Thank you for the opportunity.
Thank you. Can we have Brendan Papard, please, from AHIP?
Madam Chair, thank you again. And since I know this is not being considered as an NCOIL model, and since I know you have another agenda item, I'm not going to get into detailed discussion about this. I will simply say that right now, as Mr. Schultz alluded, Medicare and Medicaid consider copay coupons to be an illegal kickback. And their position is that copay coupons induce a patient to use a specific drug with the rest of the cost picked up by the taxpayer. And our thought here is that we should not be tying the hands of the commercial market because that would disallow them from being able to similarly be responsible with those consumer dollars, which they pay. And so that's all. Happy to answer any questions, but again, I know this is not being considered today, and so I'll stop there. Thank you.
Thanks, Brendan. Do we have any questions from any legislators in Charleston? I don't see any hands raised on Zoom.
Madam Chair,
Yes,
this is Senator Rayford. I have a question at appropriate time.
yes, please.
All right. Gentleman from AHIP that was speaking there, I don't want to get the name wrong. Was that Brendan? Or am I wrong on that?
It is.
Okay. Brendan, we just passed this bill in Arkansas. My colleague in the House started the bill on the House end. We just passed this in Arkansas. And obviously you sent lobbyists to my state to oppose the bill. And so I wanted to ask, why is it that you want to disallow consumers and individuals, some of which are paying outrageous prices for their drugs, for instance, someone with children with hemophilia? Why is it your concern that you want to disallow them the opportunity to be able to reduce their own expenses for the benefit of their family. When these are rebates that are given directly from drug manufacturers to help people, and often it is their physician that provides them the opportunity to talk, or at least a connection to, right, to get a rebate. Why is it that you are going around the country and fighting people when we know the costs of insurance and the cost of medications are so high? Why would AHIP take this position?
So you are correct. The cost of medication is tremendously high, and we are not opposed to reducing the cost of medicines. But
No, my question was, why are you opposed to the family that, for instance, and I'm using obviously a very clear situation where thousands of dollars a month are required for drugs for those people with hemophilia? Why would you want to disallow the individuals, the families, to be able to get the benefit of the rebate, which is what it was intended for?
well, the rebate is coming from the pharmaceutical company. And as I mentioned, in the government programs, these are considered an illegal kickback, and they are considered inappropriate. We don't believe that commercial plans should be treated any differently. So
Are you saying that you're saying you, this is lovely because I ran into your language in Arkansas, and I take great exception to you saying that family members, a mom and a dad in Louisiana or New York or California that have a child with hemophilia that are forced to be on a high deductible plan, that you're saying they're getting an illegal kickback because they use a rebate coupon.
no, sir.
And I know that that's been stated in some of the Medicare and the Medicaid, but it so happens that this is not even the issue and the focus of this particular proposal. It is not dealing with Medicare. It is not dealing with Medicaid. It is only dealing with commercial plans. So would you please, stay off of trying to make them sound like criminals for just trying to save money for their family? So why is it that you need to intervene and stop individuals from getting the benefit of those rebate coupons?
Sir, I was not suggesting that those individuals are engaged in illegal kickback. It is the pharmaceutical manufacturers who are inducing them to purchase a more expensive drug, and it is being considered an illegal kickback in those federal programs. And so that's why I'm referring to them, because you're right, this proposal does not deal with those. This deals with the commercial market, and I'm making the point that the commercial market should be treated similarly.
May I address that, Madam Chair? Just very quickly.
Please.
Is that the like for like comparison between Medicaid and Medicaid with this too, is that Medicare and Medicaid ban this type of assistance. Accumulator adjustment programs are not bans on this type of assistance. The patient's still allowed to use that type of assistance, and the other members of the supply chain, the insurance, the PBM, are still able to kind of take in the funds, but they're just not crediting the funds. So it's not necessarily a like for like, even if we were getting down that road as far as Medicare or Medicaid.
Chair, I know we're at the end of the line here on the time. But Madam Chair, I want to appreciate you for making this a discussion item today. And I will tell you, after dealing with this issue and some of the information that I've learned over the course of the last few weeks, if you do not have anyone that is in a position that would like to offer this language for discussion as a model at NCOIL, I'd be more than happy to get that started. But I also would be more than happy to partner with anyone that would be wanting to do that, because this is an issue that is very familiar, isn't it? And I think that we need to take a stand on it. Thank you.
Thank you, Senator Raper. We actually will probably need to get that sponsorship and have extended conversation after what we've heard today. Let's hear from Deborah Ferguson, and we'll have her close, and we'll put this on to our agenda for next conference. Go ahead, Deborah.
Yeah, sorry. And I may just sort of reiterate what Senator Raper said. My understanding from our discussions in Arkansas that the coupons were primarily given for drugs that doctors already had the patients on. They weren't encouraging the use of higher cost drugs. And they are not required to give the drug if it's not already on their drug formulary. So yeah, I think this is certainly something worth looking at model legislation. I think Arkansas actually had a pretty good bill, but thank you all.
Thank you so much. So we will continue this discussion in some fashion, and Senator will be reaching out to you to continue that discussion about potential sponsorship as well. If we can look at number 5 in our binder, it's the readoption of the model law.
I move adoption. Ken Cooley.
Well, one moment, sir. Per all our bylaws, all NCOIL models must be considered readoption every 5 years. And we can see that on page 322. Because there will be some amendments that need to be made before our next meeting, we're asking the motion to readopt the model to only readopt it until the summer meeting, not for the full 5 years. So that would be the motion, Assembly Member.
Carl Anderson from South Carolina, I make that motion.
Thank
And I
you.
second that.
Thank you, Assembly Member. All in favor, voice vote, please.
Aye.
Aye.
Thank you. The motion carries. Do we have any additional business to bring forward for this Health Insurance and Long-Term Care Issue Committee? Hearing none, I will be calling for adjournment from this committee meeting.
Thank
A
you,
motion?
Chair. So move.
Thank
Second.
you.
Yeah.
All in favor?
Aye.
Aye.
Very good. Thank you all.